What are the factors prompting development of activity based costing? See, the purpose of ABC is to find accurate cost. That is the only purpose of ABC. Why do I need accurate cost? Is traditionally what used to happen is earlier customers were able to or were ready to pay anything which a company was asking them to pay because it was a seller's market. 15 years back, 20 years back, there was not much of competition. So if you wanted to buy something, you will buy at whatever rate the shopkeeper was telling you. Now the competition has intensified a lot because what is happening is, assume you want to buy a mobile phone, you directly don't. So I remember the first mobile phone which I purchased, I just went to a shop, asked them the rate. I did not have an option of checking reviews online or consulting with someone. All that was not possible at that time. It was some 15 years back. So that time, whatever the shopkeeper said, I paid it and came back. Now what people do is, before buying one mobile phone, you'll be checking reviews online, you'll be checking with your friends, you'll be checking price at multiple places, you'll see if any discounts are possible, any bank offers are available, and then only buy. So now customers are not ready to pay anything what a shopkeeper is going to tell. So it has now become increasing competition. Because of increasing competition, I need accurate cost because I cannot play around with my customer. It's impossible for me to play around with my customer. So increasing competition and hence the need for accurate cost. This is one major reason. All other are sub reason. The major reason is this, because customers are saying we will not pay whatever you are going to tell us. We know what needs to be paid for the product. Growing overhead cost. What is growing overhead cost? Is the overhead cost as a percentage of sales is increasing now. When it increases, obviously you need more accurate method of absorbing the overheads. For if the overhead cost is only 1% of my overall cost, whether I do it accurately or I do inaccurately wouldn't really make a big difference. If you go to a shopkeeper and ask him, are you going to follow ABC? He will not say yes. Reason is very simple. For them, the extra allied cost will be some 2% of sales or 3% of sales or 4% of sales. They are not really bothered much about that. But for a lot of manufacturing companies, it's a significant proportion of cost. Also, one more factor which is helping is this. 20 years back, if you had to maintain records, people used to write journal entry, then a ledger was prepared, then a trial balance was prepared. That's how you learn in your accounts. Practical, nothing happens like that. Only one journal entry is done. Tally automatically prepares a ledger. It automatically prepares a trial balance. It automatically prepares a P&L. It automatically prepares a balance sheet, and even ratios are automatically. Everything is done automatically. So the erstwhile it was very difficult for an organization to do this. Every problem we did on ABC, you are taking a lot of time. I was doing it in Excel. I was just doing applying it and automatically the answer were coming in Excel because it is easy now to process information. So traditionally or 20 years back it was difficult for people to follow ABC because maintaining records is very cumbersome. Now it's not very cumbersome, it is okay, easy to maintain records. If it's very difficult to maintain records, I'll think about it. Now it's very easy for me to maintain records. I'm not really bothered about maintaining accounting records. Clear? Any doubts on this? Let's write in the theory part. Factors prompting development of ABC. Factors prompting development of ABC. Below that, increasing competition, increasing competition, growing overhead cost, growing overhead cost, decreased cost of information processing. I'm just writing the important ones. Decreased cost of information processing. If somebody wants to maintain ABC, it is a very simple area now. Earlier, it was very difficult for someone to implement activity based costing because you had challenges. Now, there are no challenges in implementing ABC. Clear? Next. Explain the situation in which ABC is useful. See, ABC is primarily useful if you are going to get benefit from ABC, which is more than the cost of implementing the ABC. Now, how can benefit be better? For example, there are two companies. One company overhead cost is 1% of sales, another company 25% of sales. So 1% of sales, if you implement ABC, one can go down to 0.9, but 25 can go down to 20, because ABC will also help in cost reduction. How does it help? In theory, I'm going to discuss now. So ABC is useful if you have high amount of overhead. If overhead itself is not there, what are you going to do with implementing ABC? Because in a working note 2 and working note 5, the only difference was overhead. Material cost cannot change, labor cost cannot change. So if overhead cost is very high, think about implementing ABC. Another situation, there's only one product in a company. Whatever you try to do, ultimately what will happen is all cost will go to that product. ABC has two purposes. One is cost ascertainment. There's another purpose called as cost reduction. What is that cost reduction? How does that happen? I'll discuss. So high amount of overhead, or if you have wide range of product, or if there is a increasing competition. What is non-volume related activities? Traditional method has said all your overheads are absorbed or driven by only one driver, either machine hours or labor hours, whereas some of the overhead cost can be driven by certain non-volume related activities. That is, when you analyze the activity, you will find out a driver which is different from machine hours or direct labor hours. Using machine hours or DLH is not always the ideal approach. You can find out maybe an appropriate driver for that for that activity and then follow it. Next, situations in which ABC is useful. Situations in which ABC is useful. In which ABC is useful. Almost same answer which you see there. High amount of overhead. Almost similar answer. High amount of overhead. Stiff competition. Stiff competition. Wide range of products. And you can understand that wide range of product is also one of the factor which implement, which is prompting development of ABC. If you are doing only one product, ABC was not coming into picture. So both are technically similar. Why ABC is needed? In which situation ABC is needed? First question is why ABC is needed. Second, in which are the situation ABC is useful? Technically both are same. Third question we have already discussed. What is ABC is? ABC is a method of costing where costs are allocated to activities, and from activities they are allocated to products or services. From there they are allocated to products or services. Now it ABC. ABC's accounting methodology. which assigns costs to activities, which assigns costs to activities and from activities costs are allocated to, or costs are distributed to products slash services, distributed to products slash services. Terms related to ABC, which is the next question. I'll explain each of the term and give a note. Terms related to ABC. Okay. Now, let me first explain most of the stuff and then we write it. Activity is basically something which is going to incur cost for an organization. For Bharadwaj Institute, whichever is going to incur, taking classes is one activity, conducting test is another activity, doing marketing is another activity, responding to student inquiries another activity, because all of this leads to cost incurrence for us. It is going to lead to cost incurrence for us. So whatever activity we are having, that will be also called as a cost pool, because you're going to pool the cost together. Represents a group of various individual cost effects which have, sorry, individual cost item having the same cause and effect relationship. What is same cause and effect relationship is having the same cost driver, having the same cost driver. If 20 cost of Bharadwaj Institute are based on number of students, all these 20 would be clubbed together and called as one activity or one cost pool. If 15 costs are dependent on number of tests we are conducting, that will be another cost pool. If 5 costs are dependent on number of student inquiries we are answering, that will be another cost pool. Then cost driver is something we already know. It is something which is driving the cost or which leads to cost. Cost object for which you separately want to calculate cost. Cost object, cost driver already seen in chapter 1. I'm not going to write a note again on this. I will give a note more on this. Resource cost driver and activity cost driver. Now what is resource cost driver is, if you have various expenses in an organization, these expenses need to be, we did only one problem where there was a question which said machine operation and machine maintenance need to be apportioned between inspection activity, stores activity, production activity. That ratio is on the basis of resource cost driver. That ratio is on the basis of resource cost driver. That is, inspection activity was taking 20 percentage of machine operation, production was taking 40 percentage of machine operation. So that is resource cost driver. From the activity, whatever goes to the product, that is the total of CDQ, activity cost driver. The CDQ which you are writing is nothing but activity cost driver. So every organization has a resource cost driver and has an activity cost driver. Resource cost driver is primary overhead distribution. This is secondary over, not secondary, sorry. This is primary overhead distribution. The activity cost driver is OAR. That is, what is primary overhead distribution is, you will have depreciation, you will have insurance. All these needs to go to various departments in traditional method. Here it needs to go to various activity. Every problem the activity cost was directly given, but it's not necessary they have to give you directly. They can make it a problem where they give you 10 different costs and give you information by which you can allocate the cost to every activity or apportion the cost to every activity. That's a step you may have to do in some problem. We did in only one problem where the cost given were some random names and I wanted the cost for different. So I had to do all this step of apportionment, reapportionment in that one problem alone. But otherwise, generally what used to happen is they were giving it directly. If they don't give you directly, you'll have to do this primary overhead distribution or distribution to various activity on the basis of resource cost driver. From the, you have to go to activity. You have to go to activity. Clear? Any doubts on this? right? Activity, activity, event, event that incurs cost, event that incurs cost, cost pools, pooling of different costs, pooling of different costs, which will have same cost driver. They've used same cause and effect. What is cause and effect relationship? Is a cost driver. What is influencing the cost to take place? What is influencing the cost to take place? Technically called the same cost driver. Resource cost driver. Basis used to distribute, basis used to distribute cost to various activities. Basis used to distribute cost to various activities. Used to distribute cost to various activity. Activity cost driver. Basis used to distribute activity cost driver. Basis used to distribute activity cost, activity costs, activity costs to various products slash services, to various products slash services. Distributing it to various products slash services. Clear? Any doubts on this? Then differentiate between ABC and traditional absorption. I'll just write 2-3 points. You can just read through it later. Very simple. ABC uses multiple cost driver rates. Traditional normally single. Sometimes it can do multiple also. What is multiple is department 1 on machine hours, department 2 on labor hours, department 3 on some other basis. Some rare scenario they can go for that also. Otherwise in most of the question every department same driver was getting used. So that is one thing which can happen, that you have a single driver, and ABC is more accurate method of costing as compared to your traditional method of costing. So overheads are related to activities and grouped into activity cost pools. Here they are related to cost centers or department. Cost are related to activities, more realistic or more accurate. This is not more accurate. Activity wise cost drivers are rate. Time is assumed to be the cost driver. What is time is assumed? Because we were using machine hours or labor hours. Here no machine hours, labor hours. Some will be on number of production run. Some will be on number of setups. It's not always machine. It's not always on the basis of time. Activity wise recovery rates are determined. No concept of single overhead recovery rate. Here you have concept of single recovery rate. What ABC can do is it can help you in reducing cost. How can ABC help you in reducing cost is, first what we will do is we'll calculate a cost driver rate. So assuming an organization does this, you got these three cost driver rate. Now what you need to do is, if you want to reduce forklifting cost, you need to see, is there a possibility of reducing the weight of the raw material? Is there a possibility of reducing the weight of the raw material? If an organization can reduce the weight of raw material, automatically the overhead cost will go down. Traditional method, what it was doing is, it was saying no, you please try to reduce the number of machine hours, because sorry, number of direct labor hours in this question. Traditional method thought everything is on the basis of number of labor hours. You tried reducing the number of labor hours. forklifting cost will not go down. Forklifting cost will not go down. Indirectly 33 per hour now will become 34 per hour because denominator has gone down. Numerator will not go down because forklifting cost is not dependent on labor hours. So what ABC will tell us is, okay, first is, can you do something on weight of material lifted, or can you do something on direct labor hours, or can you do something on number of machine operation. You try to attack each of the three costs. Once these three costs go down, automatically you will have saving in your overhead cost because your focus is on the activity which is causing the cost to take place. In a banking example, ABC is very useful. Now what happens in banking, lot of activities happen. A customer comes for inquiry, a check deposit activity happens, a demand draft activity happens. Lot of banks have tried automating few of this. When they automate it, because they know that cost can go down if I cut down on the activity. Earlier, before internet banking, maybe 50 customers were coming to bank for depositing money, withdrawing money. But now because of online banking, people are directly transferring the money. They are not even issuing a check. So lot of activity based improvements happen, because of which they are able to reduce their cost. They are able to reduce the cost. In fact, it's reducing cost and is also convenient for the customer. So ABC will tell us what is the real factor which is causing a cost to take place, so that we can control it. Now ABC versus traditional. ABC versus traditional method. ABC will give accurate costs as compared to traditional method. Accurate costs as compared to traditional method. I'll just write the important ones. ABC can assist in cost reduction. ABC can assist in cost reduction. Can assist in cost reduction. Next, under ABC, multiple cost driver rates are used. Multiple cost driver rates are used. Multiple cost driver rates are used. We work with single OAR / multiple OAR under traditional method. Single option is also there, multiple option is also there. But in ABC, you do not have a concept of single cost driver rate. You will follow at least 3-4 activities will be there. So when you have multiple activities, you'll have to do a multiple cost driver rate. Single OAR / multiple OAR under traditional method. Clear? Any doubts on this? Can you proceed? Okay, different types of activities. Now, this is a classification which is done again for better controlling of cost. We have 4 types of activities: unit level activity, batch level activity, product level activity, and facility level activity. Every problem, we have seen so many activities. For example, you have seen machining, setting up, store receiving, inspection, material handling, assembling, order processing, material procurement, maintenance, QC, storage cost, electricity. All these activity can be grouped under 4. Either it's a unit level activity, or a batch level activity, or a facility level activity, or a product level. What is unit level activities? All these activity will be incurred for every unit you produce. For every unit you produce, if you are going to do inspection, every unit you produce, if you are going to do inspection, it's a unit level activity. It is a unit level activity if you are going to do inspection for every product you manufacture. For every product, if you are going to do machining, which is what will happen, it is a unit level activity. For every product I manufacture, I don't do setting up. I do setting up for every 100 units or every 150 units or every 200 units together one time. So that is called a batch level activity. That is called a batch level activity. Unit level activities are those which are incurred for every unit manufactured by an organization. So unit level activity, consumption is identified with the number of units produced. Example, indirect material. Inspection of every item produced. Every item produced. Batch level activity is where the cost is incurred for every batch. Batch is number of production run, number of orders executed, where it varies with the number of batches of units produced. Product level activity and facility level activities. Product level activities are those costs which are incurred for one product but not incurred for others. Example, an organization wants to do advertising, but this advertisement is only for, assuming PepsiCo is doing advertising. PepsiCo has multiple products. So PepsiCo is advertising only for Lace. Lace is their product. They're advertising only for Lace. That is called a product level activity cost, which is incurred for one product but not incurred for other product. ITC has multiple products, so they are doing advertising for one product. What ITC is also doing is they're doing advertising for ITC as a whole. ITC as a whole, that is called facility level activity, where you are incurring the cost for all the products together. Example, rent. If you are going to pay for Bharadwaj Institute rent is a facility level activity. I cannot say rent is incurred per student. I cannot say rent is incurred for a batch of students. So it cannot be a unit level activity. It cannot be a batch level activity. It is a facility level activity. Why it is a facility level activity is because I cannot attribute this to individual classes. I cannot say I incur only for CA inter or I incur only for CA final. That is not possible. But if some costs are incurred only for CA inter, we are doing something specifically for CA inter and not for others, that is called as a product level activity. Now write classification of activities. Classification of activities. Unit level activity. Unit level activity. Costs which are incurred for every unit, of output. Example, machining. There are other examples in the material. You can see that machining. Unit level activities, costs which are incurred for every unit of output. Batch level activity. Batch level activity. Costs which are incurred for every batch of output. For every batch of output. Setting up cost, which are incurred for every batch of output. Setting up cost. Product level activity. Cost which are incurred for a specific product. Costs which are incurred for a specific product. Example, advertising of product X. You're incurring only for product X, you're not doing anything else there. Storage of raw material only for product X, you're having a separate go down. So that becomes a product level activity cost. Facility level activity. Facility level activity. Facility level activity. Costs which are incurred, which cannot be associated with a specific product, which cannot be associated with a specific product. Example, advertising of company. Advertising of company. You can do advertising for company. Clear? Any doubts on this? So we have four levels of activity. This classification is going to help an organization for better cost control. For better cost control, understanding which are incurred at per unit level, which are incurred at per batch level, which are incurred at a specific product level, and which are incurred at a facility level. For Bharadwaj Institute, most of the costs are facility level activity cost. Most of our cost is facility level. We don't incur specifically for a student, we don't incur for a group of student, and we don't incur for a specific classes. We normally incur most of rent, electricity, most of our administration related costs, most of it are facility level cost. What are the various stages in ABC implementation? Now, various stages in ABC implementation is a straightforward, simple area. What you need to do is, you have been doing working note 3, working note 4, and working note 5. But for that working note 3 to happen, you need to know what are the activities which are there in the organization. Activity, total cost, cost driver name, cost driver quantity, and cost driver rate. So first find out what are the activity. Second, find out what is the cost of that activity. How will you do that? You will have to apportion or distribute the overhead cost to the various activity. Then what you need to do is, you will have to find out the driver, and get the quantity for each of the driver. Find out the driver and get the quantity for each of the driver and get the cost driver rate. Like we did your traditional method, where we had something called as production department and service department. Here you can have something called as primary activity and support activity. Primary activity and support activity. If you want, I have not seen this being done in any question. If we want, the support activity cost can be redistributed to the primary activity, and you get the cost driver rate for primary activity. So it is basically that, first get the activity, second get the total cost, third get the cost driver name, fourth get the cost driver quantity, fifth get the cost driver rate. This is what is the implementation process of ABC. Now write implementation, stages in ABC implementation, stages in ABC implementation. Identify the activities, identify the activities, distribute overhead cost to activities, identify the activities, distribute overhead cost to the activities, identify the cost driver, cost driver, compute cost driver quantity and get cost driver rate. Very simple. Basically activity, total cost, cost driver name, cost driver quantity and cost driver rate. Clear? Any doubts on this? Can we proceed? Give examples of cost drivers for various activity pool. I'm not going to spend much on this. I've already written notes on this. We have given activity and the cost. In case you have doubt in any of this, let me know. There are some 8 cost, some examples they have given. Ordering and receiving material, number of purchase order, setting up, number of setup, machining, machine hours, assembling cost. I think we wrote direct labor hours. Here they have given another basis, number of parts, inspection, number of test, painting, number of parts, supervising, direct labor hours. In case this is, you can do this later on, not now. In case you have space in this table, you can add extra items from this if you want, but later, not now. I'm not giving you time to do that now. I'll come to question 9. I don't look at in your book because you'll end up looking at the answer. Just look at the question in the screen. PP Limited is in the process of implementing ABC in the organization. For this purpose, it has identified the following functions in its organization: R&D, design, customer service, marketing, distribution. You are required to specify 2 cost drivers for each function identified above. Think and tell me, for R&D what can be driver? Research and development, you will have to find out a driver. What can be the driver to? So activities, research and development, total cost is 20 lakh. What can be the cost driver? Think and tell me. Right, wrong doesn't really matter. What can be a driver for R&D cost? New product. It can be number of products developed. It can be research and development hours. How many hours we are spending on doing research and development? R&D hours can be there. Number of products developed can be there. Revenue which you are getting from new product, because R&D cost is proportion to the revenue I'm going to get from the new product. Let's look at what they've done. Number of research projects, personal hours on each project, personal hours on a project, which is number of R&D hours, technical complexity of the project. This is more of a theory, this is a subjective element. Technical complexity is a subjective element. Next, design of product, services and procedure. After R&D is done, the next step is designing it. So number of hours spent on designing the product, or number of products in design, or number of engineering hours, number of design hours spent. Customer service, you should be able to relate this better. What can be, for example, Bharadwaj Institute has an admin department which responds to, they basically, you are the customers and they respond to you. So for customer service, what can be the driver? Number of customer visit, then number of customer enquiries, or number of customers itself can be a driver. Number of customers itself can be a driver. Which product has more customer, which product has less customer, or enquiries which are coming from customers, or number of customer visit, number of service calls, hours spent on servicing product, number of products serviced, or number of enquiries answered from Bharadwaj Institute point of view. Next is marketing. Marketing is one, how many advertisements we are doing. In the practical world, you also go by number of units sold. Number of units sold. More units are getting sold, more marketing would have been. Less units are getting sold, less marketing. Are revenues from those products. Revenue can also be taken as a driver. In your selling and distribution expenses, the overhead absorption basis mostly will be sales, because it is dependent on the amount which is being brought. So number of sales personnel or sales revenue. Sales revenue. distribution, number of units distributed, number of customer, weight of items distributed. So again, you want to write something from this, you can write it later in that space, nothing for us to write now. Questions like this can come in exam. Earlier it used to be a descriptive kind of a question, now it can become an MCQ kind of a question. It can become an MCQ where they'll give you an activity, the MCQ will become slightly easier for you to do, but or it can be even a descriptive kind of a question where they say these are the activity, you please tell us what can be the driver. Every problem you used to have data below, it's not necessarily the data has to, because in a practical world you want to implement ABC for Bharadwaj Institute. So first you'll identify the activity, then you will have to think what is the logical driver. Nobody will give you choices. So here in this question, they were asking you what can be possible. Next, what are the advantages and limitation of ABC? Advantages, multiple advantages are there. Accuracy of cost is there. When you do accuracy of cost, what will happen is your pricing will be accurate, sales can go up, and also it can lead to reduction in cost. How does it lead to reduction? So ABC has two benefits. It benefits you on the credit side of your trading account or credit side of your P&L account, also on the debit side of your P&L. What is the impact on credit side? Because you are having right price. If I fix a right price, I'll be able to do maximum sales. Our maximum sales can happen only if you fix the correct price. So it helps you in fixing the correct price. Also, it can help you in reducing your debit side cost. It can help you in reducing your debit side expense. So accurate costing, overhead is allocated on logical basis, better pricing, utilizes unit cost rather than just total cost, helps in identifying non-value added. Non-value is something which is not adding any value. I want to eliminate them. I want to eliminate them. Once you eliminate those activity, you'll be able to reduce the cost. Only issue is here this more expensive. When it's more expensive, people may not implement it. Also, we saw situations where ABC is useful. Opposite of this is the disadvantage. If you have only limited products, why will I implement ABC? If I have limited overhead, why will I implement ABC? So ABC is not useful if it's a small organization, because overhead cost will not be much for them. It's not useful if you have very limited products, which is logical. And the most issue is sometimes getting a cost driver can be a challenge. It is a challenge in getting the cost driver for certain cost, and one, identifying itself is difficult. Second, once you identify it, once you have identified, getting that quantity can also be difficult. So now it advantages and limitation. Advantages and limitations of ABC. Advantages, accurate costs, accurate costs, accurate pricing, accurate cost, accurate pricing. You will get accurate cost, which will lead to accurate pricing, cost reduction. There are other advantages, but I've written the important ones. Accurate cost, accurate pricing, and cost reduction. There are few disadvantages, which is more expensive, not suitable for small organizations slash not suitable for small organizations slash not suitable for small organizations slash limited products. If you have limited products, I don't want to implement ABC, or it's not suitable. It is technically not suitable itself. Not suitable for small organizations slash limited products. What are the requirements of ABC implementation? If you decided to implement ABC, first your staff should be having clarity on how an ABC will be implemented. What are the steps to be done? So staff training needs to be given, and you will have to spend a lot of time on activity. What is lot of time on activities? Identify what are the activities. So give a proper definition for an activity, saying that these are the various activity for an organization. Identify a driver for that activity, then assign the cost to that activity. Once you define an activity properly, you can do the job of assigning the cost to the activity. So definition is very critical. Then you will have to find out a driver and start assigning the cost. So requirements of ABC implementation. Requirements of ABC implementation. Requirements: staff training, staff training, activity definition, identifying activity driver, activity driver, assigning costs, assigning costs, clear. How ABC can be used as a decision making tool. Now ABC can help an organization in making right decision. We have seen problems where we were calculating GP margin, we were calculating GP margin, and then we were calculating NP margin or operating profit margin. Traditional method will have conclusion. There was a homework problem where that lemon, grapes and papaya problem, where the conclusion is different under traditional method and the conclusion is different under ABC method. So ABC can help an organization to improve performance as well as profitability. On the profitability side, it helps me in deciding the right decision, because if you are in that problem, if you go with traditional method, you could be focusing on product 2, whereas what you should focus is on product 1 or product 3. We did one problem where that brown, black, some 4 products were there. So in that, what happened is the traditional method was saying the 2 products newly introduced are more profitable, whereas ABC said they are loss making products. So ABC can help you in wholesale distributors can gain significant advantage in the decision making process by correlating the cost to the various activity. Once you put it to the various activity, you will be able to take proper call. Relating to facility and resource expansion. What is facility and resource expansion is, I want to expand my facility, that is manufacturing facility, and add product 2 or add product 3. That decision can be taken accurately with the help of ABC, because ABC will tell you which is profitable. ABC is going to tell which is profit. Companies who wish to determine price based on cost plus markup. This is very rare in the practical world, but if you are going to do cost plus markup, that is cost plus profit margin, better to follow ABC method of costing. Decision support for human resources can be augmented. That is for HR, in case they want to take any decision on the cost side, they can do with the help of your ABC. ABC gives you accurate cost. Accurate cost gives you accurate decision or a better decision. All right. ABC as decision making tool. Assist in resource expansion sorry, assist in facility expansion, useful to determine price, determine price under cost plus profit scenario, useful to determine price under cost plus profit scenario, cost plus profit scenario. There are organizations who do pricing on the basis of cost plus profit. In that scenario also your ABC is going to be very useful. Other things I'm not writing it. What is activity based management? In fact, at final level there is a significant discussion on this term called as ABM. See, ABC has two purpose. One purpose is to find out the cost. Second purpose is to manage the cost. Second purpose is to manage the cost. What is managing the cost is, once you identify various cost and various cost driver rate, you will know how can you cut down on the cost. You will get to know how can you cut down on the cost. So use of ABC as a costing tool to manage cost at activity level is known as activity based cost management. ABM focuses on efficient and effective management of activity to continuously improve the value received by customer. My focus is to have proper activities which adds value to my customer. Something, for example, Bharadwaj Institute says we are taking classes, we are giving you some recorded videos, we are conducting test. Now we later on say that we will do this, will do this, will do this. If we keep adding more and more things, at some stage students will feel these extra things are not adding any value, please give us these alone, this is sufficient. You keep adding extra stuff, extra stuff, extra stuff beyond a point. For example, if we say there is going to be daily test for students, it's not going to add any value to student, because the delivery will also be not good. And if I keep daily test, you will also not be finding it useful. So doing too much of something may not be useful. So identify what is adding value to a student, those activities I have to do. If something is not adding value to a student, for example, in the past batches I was not teaching theory, in this batch I've started teaching theory. Now some students will feel it's okay, even I don't need the theory, I can manage on my own. If majority feels that, then teaching theory is a non-value added activity. Teaching theory is a non-value added activity. If majority feels they can manage on their own, in class we don't want him to spend time on this, we want him to spend time on practical area. That's depends, different people will have different perception. If majority feels something is not adding value, it is a non-value added activity. An organization should ideally try to avoid that. So for that, what we are trying to do is we do three analysis. Cost driver analysis. What is cost driver analysis? Is finding out what is the driver for a cost. Why do you do this? If you do this, you will get to know how can you cut down on the cost driver. Objective is to cut down on the CDQ. If CDQ reduces, automatically the cost will reduce. Activity analysis is identifying what is value added activity and what is non-value added activity. Non-value added activity is not even valued by my external customer, that is students don't value it. Certain activities I do for internal customer. What is internal customers? Within an organization, some people will ask me to do certain activity. For example, I maintain stock records. As an external customer, you are least bothered whether Bharadwaj Institute is maintaining stock records or not maintaining stock records. You are least bothered about it. You are least bothered whether we are maintaining stock records or not maintaining stock records. But it may add value to my internal customer because they want to know what is the stock available in company. Performance analysis, identification of appropriate measures to report the performance. ABM will be useful for cost reduction. What is BPR benchmarking? You learn in strategic management. I don't want to spend more explanation on that, but these are separate terms which you learn in your strategic management, which is part of your syllabus in your strategic management. Let's write a note on this. ABM. ABM is ABM is a costing tool. Is a costing tool. Or first, not write ABM, write it as activity based cost management. The short form is that ABM, activity based cost management, is a costing tool to manage costs, to manage cost. Basically, cost management, basically cost management application of ABC. ABC has two purposes. One is managing the cost. Second is, so first is ascertaining the cost. Second is managing. Once you ascertain, you can try to cut it down. To manage cost, basically cost management application of activity based costing. It includes cost driver analysis, activity analysis, cost driver analysis, activity analysis, and performance analysis. Clear? Every organization does something called as budget. So you will learn this in budgetary control chapter. When you prepare budgets, earlier what used to organization do is they were preparing material cost so much, labor cost so much, overhead is 20% of labor cost or 10% of material cost or per labor or per machine hour. Budgeting was very simple. Now ABB says no, don't do budgeting like that. You will have to first calculate material, labor, all that you do, then identify various activities and do budgeting for every activity. How many production runs are going to be there, how many machine hours are going to be there, how many orders will be executed, how many inspections will be carried out, and accordingly do the budgeting, which will be more accurate. And also see what is the purpose of budget is, once I prepare a budget, it will help me in doing my planning part. For example, one of the purpose of a budget is manpower planning. What is manpower planning? Is how many employees do you need. So for example, earlier they were just doing labor hours, machine hours and closing it. Now what you can do is, I have to carry out 5,000 inspections in a year. One employee can do 200 inspections in a year. So 5,000 inspection means we will need 25 employees. So I can do that. Second, I have to carry out 10,000 inspection, but this is going to be done with a machine. Manual is not needed. So you can now plan how many machines do you need, or you can plan how much space do you need. So men, material, machine, money, all the four, how much do you need will come out of a budget, and more accurate will happen in this. All your four factors of production, men, material, machine and money. Activity analyzes the resource input or cost for each activity, provides a framework for estimating the amount of resource required for the budgeted level of activity. At the end of the year, you will do a comparison to highlight discrepancy. Why this comparison? See, I keep telling this to many students, and now we have reached a stage where you should start implementing it. You should prepare a 15-day plan for your study preparation, or a 10-day plan, or a 1-month preparation. So today at home, decide what are you going to prepare from this 25th till the end of the month. Every day, which subject and what are you going to study. What will happen is, you may follow it, you may not follow it. If you are not following it, at least you will know you are going wrong. Now what is happening in your mind is, you are thinking everything is going smooth. I have been doing, you are not even understanding whether you have wasted time or not wasted time. So unless there is a plan available, you will never get to know whether you're wasting time or not wasting time. So it's high time. This is just an advice for you. You should prepare a weekly plan or a monthly plan. Doing a longer plan may not be feasible at this stage, but at least you know that next week what you want to study. Every day, please prepare a plan for every day, a week in advance. If you're able to follow, great. If you're not able to follow, at least you will know what are the challenges. The next week you prepare, next week you prepare. At some stage you will get into an accurate budget, and also you will also feel bad if you're wasting time. See, because many a times this is what happens with students. Why? See, the only purpose of you coming to classes is we want you to study from 6:30 to 12:30. Otherwise classes are not needed if you have to do this at home. Many students, if today class was not there, today you wouldn't have opened your costing subject or opened your costing material and done preparation from 6:30 to 12:30 or 1 o'clock. That is highly impossible for many people because you don't have that guidance. You think you will do it later. Now the timetable which we give is a guidance for you as to what we are going to do. Assuming I tell you that I'll not give you a timetable, you come to the class, randomly any teacher will come and take a class. You will also find it very difficult. We also find it very difficult to do the planning. So when we are giving you a plan for the next week, a similar plan you should prepare at your end, saying that what are you going to study and how many hours are you going to study, which area, if possible write it, or at least the subject you write it, and then please spend that time. This is something which I want you to follow 100% for next week onwards. So do your planning. You will know that you are not available on Thursday, so don't write Thursday in your planning saying that Thursday you are not going to study because of XYZ reason, but at least have a plan in place. Without having a plan in place, there is a because the point is exams are in May, we understand, but time will keep going. We have now already spent maybe around 1 month or 2 months of your classes, or 2 months, more than 2 months of classes are over. Like this, time will keep moving forward, and you will then later on reach a stage where you will see, okay, now I have very limited time and how do I prepare? So please prepare a plan. So what ABB is saying is, when you prepare your plan, it can help you in planning and controlling the activity of an organization so that you get a cost effective budget. What we are trying to do, work or activity to be performed. Which subject are you going to study? How many hours are you going to study? In your case, cost is not there. In your case, the cost element is not there. But which subject are you going to study and how much time are you going to study? That planning has to be done by you. Benefits is accuracy is improved. When accuracy is improved, what also indirectly happens is it can help you in reducing the needless work. Some of the work which is not needed, you want to cut it down. You want to cut it down. Again, request is very simple. So I've been talking about ABB, but my point also is, please prepare a budget. Please prepare a plan in place. Plan is very critical. Plan is very critical for your studies. If you are not having a plan, failing to plan is planning for a failure. You are planning yourself for a failure. When somebody is not doing a planning, you are basically planning yourself for a failure. Assuming we don't give you a plan, what happens? Assuming ICI says write your exam, we will not tell you what is the passing marks now. We will decide once you write the exam, in this subject 40 is passing mark, in another subject 50 is passing mark, in another subject 60 is passing mark. You will get very irritated, no, if ICI suddenly says. So ICI has given you a guidance saying that we want you to score 40 in every subject and 50 as an aggregate. That's a guidance which ICI has given you. If ICI doesn't give you that guidance, you will feel irritated. Same is what we are telling you. Please prepare, because nobody can check this whether you have prepared a plan or not. That plan is only for you. You can maybe, for guidance purpose, you can share it with a friend of yours, they can share it with yours, so that it becomes little better. Because nothing else, you can give it to me, but I may not be able to add much value because I cannot respond to 40 students, check their plan and then respond, so it may not be feasible. So but what you can do is at least have a plan in place. Speak with a friend of yours saying that this is my plan, you give your plan, let's see what happens at the end of the week. Again, I'm saying 90% will not be able to follow the plan. It's not that you have to 100% follow the plan, but first week you will not follow it. Second week, some guilt feeling will start coming in, saying that no, I cannot waste time beyond this, because that will keep coming in, and at some stage you will start preparing. It's not that the last 2 months alone you have to prepare. Now write activity based budgeting. ABB. ABB is budgeting activity wise. ABB is budgeting activity wise. It improves it improves accuracy of forecast, it improves accuracy of forecast, improves accuracy of forecast, determines activity to be done, determines activity to be done, quantity of the activity, and the cost of the activity. How much will be the quantity and how much is going to be the cost? Basically, following the concept of ABC in your budgeting is called ABB. When you do your budgeting, if you follow the concept of activity based costing, it becomes activity based budgeting. Clear? Any doubts on this? We're done with this chapter. I'll take a 10 minutes break and then we start with the next chapter. Okay, we are now moving to the next chapter. We'll move to a chapter called cost sheet. We are moving a chapter called cost sheet. In cost sheet, you will learn about different breakup of cost, which is what chapter 2, 3, 4, 5 is going to be. So I'll come to cost sheet. Before we start solving anything here or discussing anything, let's give a broad overview. What is going to happen in cost sheet chapter is you are going to learn about different ways of classifying cost, different ways of classifying cost. We have already looked at multiple ways, something called as a product cost, period cost, discretionary cost, avoidable cost, committed cost, some multiple categories we have seen. Here cost sheet has a different classification. So first you learn about different categories of cost, then we combine them together and prepare something called as a cost sheet. We combine them together and prepare something called as a cost sheet. With the help of the cost sheet, you will be able to ascertain the cost of a product or a service. This cost sheet is basically a subset of single or unit or output costing. It is a subset of that method of costing. The cost sheet methodology and the format can undergo changes based on the method of costing, which you will learn from chapter 8 to 12. As of now, we are going to learn about a standardized way of calculating cost, but then customization will happen depending on different industries which are there. Some industries cost classification, because we have a way of doing cost classification. Our way will say direct material, direct labor, direct expense. If I do a service industry, material cost itself will not be there. Major chunk of the cost may not be material. So there the classification is different. Some other industry, the classification could be different, the methodology could be different. So first you learn about a broad way of doing cost classification. Based on that, prepare a cost sheet. When you prepare a cost sheet, you will be able to identify the cost of a product or service. When you are calculating this, every company can have some closing stock of raw material, FG, WIP. How to do valuation of that also you will understand here. FIFO method, LIFO method, weighted average cost method. So you will understand about the inventory valuation aspect and ultimately get to know the cost of a product or service. In between, you may also get to know the profit of the company. Profits of the company can also get computed in the format. So now let's first understand what are we going to do in classification. First classification is relationship to end product. The classification is there's a direct cost and there is a indirect cost. What is direct cost? Is cost which is directly and economically identified with unit of production. What is directly and economically is if you look at the end product, looking at the chair, I can say that plastic chips would have been used to manufacture the chair. Looking at maybe a laptop, I can say some steel plates have been used in manufacturing, some steel has been used, some plastic components have been used. So looking at the product, you can say what has been used, what would have happened. So looking at the product instantly or spontaneously, what can you find? But what also matters is economically. What is economically is if I look at a shirt, I can say in the shirt, cloth has been used, buttons have been used, thread have been used. I want to know the cloth, but I don't want to know the thread. I don't want to know the amount of thread which has gone into the making of a shirt because it is not economically identifiable. What is economically identifiable is the benefit of getting an information should be more than the cost of getting an information. Every information I want, for example, Bharadwaj Institute tracks certain information. We track how many students are registered for the classes. We track who has paid fees, who has not paid fees. For that I have an admin team, but I get benefit out of it because I get to know who has not paid fees, so I can do follow up and collect the fees. At your end, you are not tracking how much expenses you are doing every day because you don't see any benefit out of it. Tracking it, you are not seeing any benefit out of it. Your parents could be tracking it because they see some benefit out of it. They see. So whatever work I do, there is a cost attached with and there is a benefit attached with it. If the benefit is more than the cost, then it is economically identifiable. Then it is called economically identifiable. But if benefit is not there or benefit is less, then it is not economically identifiable. That is why example, cloth in the making of shirt, direct. Leather in the making of shoe, direct. Thread in the making of shirt, indirect, because it's not economically identifiable, not cost effective to identify this. Doesn't make any sense for me to identify this. So it is not economically identifiable. We call it as indirect cost. We call it as indirect cost. So definition is very simple. One is direct cost. Anything which is not direct is indirect. Anything which is not direct is indirect. Let's write now. Give the next chapter. Chapter 6, cost sheet. Chapter 6, cost sheet. Classification 1. Classification 1. Relationship to end product. Relationship to end product. Write classification 1 and split into 2. Divide that into 2. Just give me a minute. Classification 1. Classification 1. Split into direct cost, indirect cost. 2 classification. Divide that into 2. Direct cost and indirect cost. Split that into 2. Direct cost and indirect cost. Direct cost explanation. Cost which is directly and economically identifiable. Cost which is directly and economically identifiable with end product. Which is directly and economically identifiable with end product. Indirect cost. Cost which is not a direct cost. Residuary category. Basically it's residual. If something is not direct, you call it as indirect. Cost which is not a direct cost. So first classification is, I classify the cost into direct and indirect. Direct are those costs which is directly and economically identifiable with the end product. Indirect cost is one which is not a direct cost. Clear? Any doubts on this? Next, classification 2. Classification 2. Classification by function. By function. Split into 3. Classification 2 split into 3 categories. Split into 3 categories. Production, sales, administration. Production, sales and administration. Production, sales and administration. Second classification, which is by function. Production, put arrow mark down. Department which produces product. Department which produces product. Sales department which sells product. Department which sells product. Production department which produces product. Sales department which sells product. Administration, other departments which help in production slash sales. Other departments which help in production slash sales. Other departments which help in production and technically sales. So every organization can have three types of department. One who are producing, second who are selling, third who are helping. Who helps? HR team helps, purchase team helps, research and development helps, stores team helps. So whoever is doing the helping job, whoever is doing the manufacturing job, and whoever is doing the sales job. Classification 3. In fact, what I gave should have been classification 3, but that's okay. I'll call this as, this is technically my classification 2, but doesn't matter. By nature of cost, classification 3. By nature of cost, again 3 classification. Material, labor, expenses. 3 classification: material, labor and expenses. Material, labor and expenses. Material, put arrow mark down. Physical thing which goes into making a product. What is material? Is basically physical item which you can touch and feel. Physical thing which goes into making a product. Physical thing which goes into making a product. Labor, reward paid to workforce, a reward paid to employees. Reward paid to employees. Whatever reward you are giving to employees. Expenses, residuary category. What is residuary category? Is balancing figure. Residuary category. Okay, now I've given you 3 ways of classifying the cost. Any cost you give, you can do classification in all the 3. For example, thread. I gave you an example of thread. Thread is an indirect cost as per classification 1. Thread is an indirect cost as per classification 1. Thread is a production cost because it's incurred in factory as per classification 2. And thread is a material cost as per classification 3 because that is physical, you can touch and feel. You can touch and feel. So it is a classification 3 material cost. Sales commission. Sales commission is an indirect cost. It is an indirect cost because it's not related to manufacturing. It's not related to the manufacturing. So sales commission is an indirect cost. Sales commission is a sales cost. Sales commission is a sales cost. Sales commission can be a labor, can be an expense. That's classification differs because if you're paying to your own employees, you can argue for a labor cost or you can argue for an expense. So sales commission, let's take it as an expenditure. Factory rent. Factory rent is one more example. Factory rent is an indirect cost because I cannot tell what is the rent per unit of production. Factory rent is a production cost. It is a production cost because it's incurred at factory. Factory is production. Factory rent is an expense. Factory rent is an expense. So any cost you take, you can do a classification as per classification 1. You can do a classification as per classification 2. You can do a classification as per classification 3. Basically, any expense can be categorized under any of the category. So basically what I can say is a cost can either be a direct or indirect. It cannot be both. A cost can either be a production, sales or administration. It cannot be two of these three. Or it can either be a material, labor or expense. It cannot be two out of these three. But it can be material with indirect cost with production cost. It can be material with labor cost, sorry, material with your direct cost and maybe expenses. So you can take it from one place. So it can be that a cost can be categorized under classification 1, classification 2, classification 3. Now what we need to do is, I'll tell you to write this chart and sometime it's the chart is there, you'll have to write a flow chart. First you have to identify what is the type of the cost. Is it a direct cost or an indirect cost? So assume you identified it is direct slash indirect. If it's direct, then there is a next question to you, which is classification 3. If you say answer is direct, I want to know whether it is material, labor, expenses. Whatever answer you give, based on that I will say finally it is direct material, direct labor, direct expense. If you tell me first question I asked you, you told me direct. Second question is what is the nature of the cost. If you tell me answer is direct, I'll ask you what is the nature of the cost, or you yourself have to ask this question, what is the nature of cost. If it is material, then answer is direct material. If it's labor, answer is direct labor. If it's expenses, answer is direct expenses. If you say indirect, then I want to know where is the cost incurred. Where is the cost incurred? Is it incurred in factory, or is it incurred in administration, or is it incurred in sales? So it will become indirect factory, indirect administration, indirect sales, direct material, direct labor, direct expense. We don't use the word indirect, we use the word overhead. So it will be production overhead, sales overhead, administration overhead. So broad classification of cost is 6 categories. The cost can be classified into 6 different category, which is direct material, direct labor, direct expense, production overhead, administration overhead, selling and distribution overhead. So first you ask this question, then you ask whether it is material, labor or expenses. I have changed the order, doesn't really matter. Then you ask whether it is factory, marketing or administration, and what you do is you combine them: direct material, direct labor, direct expense, factory overheads, selling and distribution overheads, administration overheads. So any cost I give has to go in one of these 6 category, has to go in one of these 6 category, and that's how cost sheet would be prepared. I'll come to the format of cost sheet in some time, but anyhow you will have to do this classification in this 6 category. Just give me a minute. You put this chart in your notebook, flow chart for classification of cost. Flow chart for classification of cost, write this in your notebook. Is the cost directly and economically identifiable? If you say yes, it is a direct cost, please tell the nature. You can just write nature in bracket, material, labor, expenses, where in bracket factory, sales and admin. So if the answer is directly and economically identifiable, you say it as direct cost. If it's not directly and economically identifiable, it becomes indirect cost. For direct cost, I want to know what is the nature of cost. For indirect cost, I want to know where is the cost incurred. Direct along with material, or direct along with that labor, or direct along with that expenses, indirect along with that factory, indirect along with that sales, indirect along with that administration. We don't use the word indirect, we use the word overhead. We use the word overhead. Can I have something called as direct sales cost, direct admin? Yes, possible, but I don't want to know that classification, because if it's direct, I don't want to know whether it is factory, administration, or sales. I want to know only whether it is material, labor, or expenses. So you can club multiple ways, but what I want to club is, with direct, I want to classify the nature. With indirect, I want to know where is the cost incurred. Clear? Any doubts on this? Now go through these various items which are there in page 213. These are different costs which are there. If you have doubt in any of this, please let me know. Page 213, different costs for direct material, direct labor, direct expense, factory overheads, administration overheads, general overheads, distribution overheads, everything is there. Any of this you need an explanation, let me know. I'll explain that. First, go through direct material. Now, the term direct material means all cost related to raw material and all cost incurred to bring the material to the factory. So, freight is not a material cost. Freight is something is like an expense. But according to the concept, all cost which you incur to bring the material to the factory, till the raw material reaches my factory, everything is material cost. So, if you are paying some freight, some insurance you are paying, if you are getting some discounts, what is duties and taxes is, when for example in Bharadwaj Institute, when you paid the fees, you paid GST along with that. GST will also form part of the expenses of the company or the direct material of the company. Any cost incurred to bring the raw material to the factory. Whenever you buy a raw material or whenever you buy something, there's a basic price. On top of that, they'll charge you some taxes, some delivery charges, some insurance charges. So all costs which you incur to bring the material to the factory is part of direct material cost. Any doubts on direct material? Any doubts on direct material? All costs incurred to bring the material to the factory premises of the company will form part of direct material. Direct labor, go through this. I'll explain. Go to, there's a doubt on ex gratia. I'll explain that. Basically, direct labor means anything which you pay to direct workers. There are direct workers and indirect worker also. Who's direct worker is person who's doing the production. There are a lot of other people in the company. Example, finance and accounts team. They are not going to do production. So anything which you pay to direct worker, you may be paying wages, you may be giving allowances, overtime payment, bonus. Ex gratia is basically a payment which happens in case a death happens to an employee. So ex gratia payment, employer's contribution to provident fund and other similar funds, other benefits, anything which is paid to direct worker, anything which is paid to direct worker. Then go through direct expenses. See direct expenses and factory overheads together. Okay, see them together. Okay, direct expenses and factory overheads is one place where there will be a lot of confusion in classification. What is direct expense? In practical world, if some amount is material, then we classify it as direct cost. Something which is not that material, we classify as indirect cost or factory overhead. Core difference between direct expense and factory overhead is if something which can be calculated for every unit of production, you can say that to be a direct expense. Something which is not for every unit of production, you can call it to be a factory overhead. But practical world, it depends on materiality level. For example, uh, there's an industry called tiles manufacturing industry. In tiles manufacturing industry, power and fuel is a very important expense, material expense. In that industry, power and fuel is a direct expense. In some other industry, power and fuel can be a factory overhead also. Power and fuel is can be a factory. What is power and fuel? Is electricity expense. Electricity expense. We will see some problems where power and fuel will be in factory overheads. Will be in factory overheads. Practical world, it depends on how material it is. If you can remember this items, because this is a place where there will be a lot of confusion. I also, when I do a problem, sometimes I'll say it is factory overhead, sometimes I'll say it is direct expense. In practical world, I'll have extra information to understand where to classify. What matters is how critical is it. So royalty paid, if you're paying royalty for every unit of production, then it can be a direct expense. If you're paying a lump sum royalty or a single amount, then I can treat it to be a factory overhead also. I can argue it to be a factory overhead. Higher charges paid for hiring specific equipment, some special equipment, any specific expense you incur will form part of direct. Any specific, if you see specific equipment, specific design, specific software, all this will be direct expenses. Fee for technical assistance, amortized cost of molds and pattern. What is molds and pattern? Is basically the design. When you manufacture a design, you need a mold and pattern for to manufacture it. So all this they are saying direct expense. And you see here consumable stores, depreciation, lease rent. Now you see lease rent of production asset, and here you see higher charges paid for hiring specific equipment. Both are rent only. Higher charges term you use or lease rent term you use, both are rent payment only. but one they have classified under factory overheads, one they have classified under direct expenses. This is one place where confusion will be there. Practical world, you will have some extra information to the classification. As far as class problems are concerned, if any of them is there, I will go with this classification. But again, I'm repeating, I don't exactly remember them. At times, I may deviate also. At times, something will be factory overhead in the final answer. We could be saying direct expense, or something would be direct expense in the final answer. We could be saying factory overhead. Indirect employee cost related to production, drawing and designing department, insurance expenses, amortized cost of fixtures, toolings, service department cost, pollution control, anything which is incurred in the factory. Now, by nature, direct material, direct labor, direct expense, all the three are incurred in factory only. All the three are incurred in factory only. I don't have confusion in direct material and direct labor, because direct material, physical item, direct labor, reward to the workforce. So the confusion is not there in direct material and direct labor. The problem only comes in direct expenses, because sometimes can go as factory overhead, certain items can go as every unit you produce, you're paying royalty, can be treated as direct expense. Every unit I produce, I have to pay some specific rent. I have to pay rent to produce that product. That is, I've rented the machinery and I have to pay rent. Can go under direct expenses. Sometimes can go under factory overhead. Look at the other cost. Admin, selling and distribution. Quickly go through all the three. General and administrative overheads, selling overheads, distribution overheads. Most of that could be self-explanatory, but if you have doubt, let me know. All your office related expenses, corporate office expenses will go under administration category. Showroom related expense will go under selling category. Showroom or sales office, sales commission, sales department. So that depreciation is related to what you will have to see. Depreciation of plant and machinery will go under factory overhead. Depreciation of office appliances will go under administration overhead. Depreciation of sales office furniture, there's some furniture there in the sales office, that will go under selling and distribution. So which depreciation it is, we'll have to see. Clear? Any doubts in any of those items? Done. And now write format of cost sheet. Comes the important part, format of cost sheet. This is the format we will use to get the cost of a product or service. Particulars and two amount column, one inner and outer column. Particulars, amount. Particulars be a broader column. Amount and amount. Particulars, amount, amount. Let the particulars be a broader column. Two amount columns, one inner column and outer column to do the calculation. First heading, direct material. Direct material. Basically that 6 classification which you see is what is going to come. Direct material. Underline that. Below that, opening stock of raw material. Inner column, XXX. Opening stock of raw material. Opening stock of raw material. Add purchase of raw material. Purchase of raw material. Purchase of raw material. Add incidental expenses on purchase. Incidental expenses on purchase. What is incidental expenses? All those freight, insurance, whatever extra cost you are incurring on purchase. Opening stock, add purchase, add incidental expense, less closing stock of raw material. Closing stock of raw material. Clear? So basically it's opening stock plus purchase minus closing stock. Opening stock plus purchase minus closing stock is the raw material expense. Next, direct labor. Directly outer column, XXX. Direct labor, outer column, XXX. Now, when you do a problem, direct labor can have a breakup. They can say expense 1, expense 2, expense 3. All that you will have to write inner column and then one amount. This inner and outer column is just to show the calculation. Direct expenses, again outer column. Direct expenses. All these three together, direct material, direct labor and direct expenses, called prime cost. Prime cost. Prime cost is sum of direct material, direct labor, direct expense, are basically all direct costs put together. Prime cost is all direct costs put together. Clear? Factory overheads. Now we'll get into the overheads category. I had given you 6 ways of classifying the cost: direct material, direct labor, direct expenses. Done. Now we go to overheads. Factory overheads. This factory overheads, few places you can write. Other name is production. Some question will use the word works. Some question will use the word manufacturing. All are same. Factory overhead, production overhead, works overhead, manufacturing overheads, all are same only. We'll normally use the word factory overheads, but some question ICA may use the word even works overhead. Works means related to factory. Manufacturing overheads, production overhead, any name can be used. factory, production, works, manufacturing. As I said, your direct material, direct labor, direct expenses, everything incurred at the factory, everything incurred in the production. You're adding the overheads, factory overheads. This is called gross works cost. Works means factory. Gross works cost. Gross works cost, which is nothing but factory cost. Gross factory cost. Gross factory cost. Works means factory. So this is called as gross works cost. Basically, what is gross works cost is all cost incurred in the factory is included in this. All cost incurred in the factory is considered in gross works cost. Add opening work in progress less closing work in progress. Opening work in progress less closing work in progress. Once you adjust this, it is called net works cost. Net works cost. What is net works cost? Is net factory cost. Net works cost is nothing but net factory cost. Gross factory cost is including everything. Adjust work in progress. What is work in progress? Is units which are yet to be completed. One, there is a raw material. Second, there's a finished product, and in between is called work in progress. You are yet to complete them. On that also we incur expenses. On units which are yet to be completed also we do incur expenses. So we add the opening expenses and deduct the closing, because this closing will become next year expenditure. Closing will become the next year expenditure. So you remove the closing work in progress, you get net works cost. Any doubts till this? Okay. Apart from that 6 classification I gave you, ICI have 5 more classification which are there. Those are specific category of cost. That is, whatever names I'm going to give, if you find that cost in the question, you need to write it here, not go by direct material, direct labor, direct expense, or factory overheads, administration overhead, and selling and distribution overhead. This cost sheet format, maybe some 5 years back, when in the same ICI curriculum, we had only 6 classification. Some 5 extra items are added. I'll just give one example first. The first example is quality control cost. There's an example called quality control cost. Earlier, quality control was classified as indirect. It is not related to manufacturing. So we used to call it as indirect. It's incurred in factory. So quality control was a factory overhead some 5-10 years back in the ICI curriculum. In the ICI curriculum, we used to classify it as factory overhead. But in the format, they have given this 5 separate line items. You'll have to write them. If you get those items specifically, you'll have to write here. First is write quality control cost. This was earlier going to an area called as factory overhead. Quality control cost. Primary packing cost. Primary packing cost. There's something called as primary packing and secondary packing. I'll explain that later. Primary packing cost. Admin overhead relating to production. Admin overhead relating to production. Admin overhead relating to production. You saw that administration overhead classification. You will see now 2 types of administration overhead. That I said administration are the people who help either production or the sales team. Whatever expenses you have incurred to help the production team, consider it here. Other expenses considered later. What later I'll explain in some time. Administration overhead relating to production. Research and development cost. Research and development cost. Research and development cost less credit for recoveries. I'll explain these items. First you write it. Credit for recoveries, scrap. Anything which you subtract, we write it in brackets. XXX in bracket, that means you're subtracting it. That's how the presentation is normally done. Credit for recoveries are scrap. and this is called cost of production. Cost of production. Few years back, networks cost, the other name was cost of production. Networks cost, the other name was cost of production. These 5 line items have been added. One is quality control, any expenditure incurred for assuring the quality of a product. Any company which manufactures a product does not directly sell it, they do some quality inspection, that is called quality control cost. Primary packing I'll touch upon later. Admin overhead can be of two categories. One is relating to production and others, where will it come, we'll see it later. Research and development, self-explanatory, any expense incurred on doing research and development. Credit for recoveries or scrap is when you do manufacturing. In the manufacturing process, some wastage will happen, some scrap will arise, that is, you're manufacturing, some scrap has come in the process. This scrap will be sold by the company. I'll be selling the scrap in the open market, that will reduce my cost, after cost of production. Add opening stock of FG less closing stock of FG, cost of goods sold. I'll explain this also. Cost of goods sold. Now, whatever production an organization does, a part of it will get sold. Sometimes exactly can get sold. So production plus the opening stock, these are debit side of your trading account. If you look at the trading account, in the debit side of the trading account, production is like purchase. Purchase plus opening stock will come. In the credit side, less closing stock, that is called cost of goods sold. So opening stock plus purchase minus closing stock is COGS. You could have come across this formula. Same way, opening stock plus production minus closing stock is cost of goods sold. Then general and administrative overhead. I told you there is some overhead which is pending. That in overheads, your administrative overhead, one we wrote above called as relating to production. Everything else is called general and administrative overhead. Selling and distribution overhead. Selling and distribution overheads, we call it as cost of sales. Complete this, I'll explain. No, there's a separate classification. Earlier it was not general and administrative. Research and development would go to factory overhead. Reason is research and development mostly would be done in the factory. R&D mostly would be done at the factory. So people were classifying it to be a part of factory overhead. See, though I gave you classification saying production, administration and sales, but we want to know where is the cost incurred. If you incur it at the factory, it is a production overhead. If you incur it in sales office, it is a sales overhead. Other places, it's an administrative overhead. Now listen, what is COGS and COS different is? Sales minus COGS is gross profit. You have a trading account, you have a P&L account. Cost of sales means every cost is included. So normally what you do in your financial accounting is, in trading account you write all direct expenses. In your P&L account you write your indirect expenses. So the same thing happens here also. Till COGS we are basically bringing in, not exactly direct indirect, till COGS we are bringing in all factory related cost. Post COGS we are bringing all non-factory related cost. So sales minus cost of goods sold is technically gross profit, and sales minus cost of sales is technically net profit. Sales minus COGS is gross profit, and sales minus COS is technically net profit. Last line, profit and sales. Technically, what you write as profit is the net profit. Profit and sales. Okay, I'll take a break of 5 minutes and then explain the format again, and then we'll do the problem. So let's take a break of 5 minutes. Okay, let's just go through the format again. I basically said there are 6 classification. One is direct material, direct labor, direct expense, factory overheads, administration overheads, and selling and distribution overheads. Only thing is there are 5 more extra items which are added. We started with direct material, which is opening stock of raw material, add purchases, add incidental expense, less closing stock of raw material, which gave you direct material. Then you have direct labor, you have direct expense. Total was called as prime cost. The total was called as prime cost. After prime cost, we added something called as factory overheads, call it as gross works cost, or technically gross factory cost. After gross works cost, add opening WIP, less closing WIP, you get net works cost or net factory cost. 5 line items are there. One is your primary packing, quality control, research and development, admin overhead relating to production, credit for recoveries or scrap. That will give you something called as cost of production. Add opening FG, less closing FG. Sometimes this closing FG may have to be valued by us using the concept of, you will have to value this using the concept of your FIFO method or weighted average cost method or LIFO method. LIFO is something we don't follow. FIFO or weighted average is what we normally do. Cost of goods sold, then you get general and administrative overhead, selling and distribution overhead, cost of sales, profit and sales. Below this, notes, gross profit is equal to sales minus cost of goods sold. This equation may be used in few problem. Gross profit is equal to sales minus COGS. Sales minus COGS. Net profit is equal to sales minus cost of sales. Net profit is equal to sales minus cost of sales. Sales minus cost of sales. Cost of goods available for sale. Cost of goods available for sale is equal to, what is this? I'll explain later. Cost of goods available for sale is equal to opening FG plus cost of production, or opening FG plus cost of production, or closing FG plus cost of goods sold. First write this: cost of goods available for sale is equal to opening FG plus cost of production, or closing FG plus cost of goods sold. Closing FG plus cost of goods sold. Now, what is goods available for sale is how many units can I sell? That is, you can sell the cost of goods available for sale is what you produced plus what was there in opening stock. If you want, you can sell this fully. Available for sale. This is available for sale. Production plus the opening stock. Or you can say available for sale is what is sold and what is unsold at the end of the year. What is sold by the company and what is unsold at the end of the year. That is also goods available for sale. Two ways of looking at it. One, you can look from debit side, or you can look from credit side. Debit side says production plus opening stock, go ahead and sell it. You want to sell, please sell this. Production plus the opening stock, please go ahead and sell this. I get to know I sold something, something is unsold, something is unsold. So it can be called as opening FG plus cost of production, or unsold plus sold, closing FG plus cost of goods sold, unsold plus the sold portion. There are two ways of looking at it. Then one more equation. Opening stock in bracket units, opening stock in bracket units, production again in bracket units is equal to units sold plus closing stock units. This can be for units, it can also be for value, this equation. That is, opening stock and production is the debit side of the trading account. Units sold and closing stock is the credit side of the trading account. So both sales plus closing stock is equal to opening stock plus production. Sales plus closing stock is equal to opening stock plus production, or you can say cost of units sold, not the value, cost. Okay, I'm talking about the cost. Cost of units sold plus the closing stock value is equal to opening stock value plus cost of production. You can, this is where that equation came. This equation is that only, cost of production plus opening stock, cost of production plus opening stock minus closing stock goes the other side. You get cost of goods sold or cost of units sold. Cost of goods sold or the cost of units sold. Clear? Any doubts on this? Now I'll move to the theory part. Theory, there is not much from this chapter onwards. May not take me more than 10 minutes to discuss the theory now onwards in every chapter except for the last chapter where we have a lot of theory oriented question. This chapter nothing much is going to be there. What are the two methods of maintaining cost accounting records? Non-integrated, integrated. We have already written a note on this. When I gave the initial notes, we wrote a note on this that there are two methods of maintaining record: integrated system and non-integrated system. No separate notes on that. What is non-integrated accounting system? So we have gone through in detail on non-integrated accounting system, but just I'll again summarize. In non-integrated accounting system, I keep record of only expenses. I keep record of only expenses and the income, and the main income, not the sundry income. We record only the main income, which is the sale income, and the expenses which are being incurred, so that a cost sheet can be prepared. We maintain separate ledger for your costing and financial. In non-integrated system, I am not really bothered whether I have to pay so much to the creditor, I have to receive so much from the debtor. All that information will not come in non-integrated system. Objective is not to get into a balance sheet preparation. Objective is to just get into a cost sheet. So here I'll record only those transactions which relate to the product or service being provided. Interest, bad debt, miscellaneous income, income tax, everything is ignored. It will also record your notional expenses like rent on own premises. NI system does not record all accounts, and which are not recorded, you bring in CLC account. You bring in cost ledger control account. Now in your theory part, theory notes, theory notes, non-integrated accounting system. Maintenance of separate costing records. Maintenance of separate costing records. Maintenance of separate costing records. Records all expenses and income. Records all expenses and income related to product slash service. Product slash service. All expenses and income related to product slash service records notional expenses as well, records notional expenses as well, notional expenses. You'll end up recording all your notional items as well in this method. CLC account will be used, CLC account will be used for accounts which are not maintained. CLC account will be used for accounts which are not maintained. There are certain ledger accounts which we don't open, like a bank account or a cash account or a debtor account. All that is replaced with cost ledger control account. That is how non-integrated system is going to work. Clear? Third question I've already explained. We have done this in, this will not come as a direct theory question, but we have seen this in problem. CLC account, also known as GL adjustment, raw material, wages control. This can be very good for you to revise it together, because it will tell you what is debited, what is credited. Stores ledger will record all inflow which are debited, outflow are credited. Normal losses transferred to overhead, abnormal losses transferred to costing P&L. Wages control debited with wages paid, then it is analyzed as WIP control and factory overhead control. These are the two mandatory entries I used to say. Abnormal idle time will be transferred to costing P&L. If any non-productive time is there of direct workers, that is treated as indirect wages. We have seen this in one problem. There was a non-productive time of direct workers. Manufacturing overhead, works overhead, factory overhead, different names are there. Debited with overhead incurred, and this is absorbed to WIP control account. The difference is under our over absorption. You can either carry it forward to the next year or transfer this to costing P&L. Work in progress, what are is debited with cost of production, which is direct material, direct labor, direct expense and factory overhead. All these will come in the debit side. You will record opening WIP, closing WIP and transfer the amount to the FG control. Administration will be debited with overhead incurred, and it will be transferred to, okay, right here FG control slash, I think there's an error, slash cost of sales. FG control slash cost of sales. FG control account slash cost of sales. Cost of sales. That is, your administrative overhead relating to production will go to FG control, and general and administrative overhead will go to cost of sales. Differences under our over absorption, either carry it forward or take it to costing P&L. FG control debited with what you get from WIP, something may come from administration overhead. You transfer this to cost of sales account. Selling and distribution debited with overhead incurred, credited with overhead recovered. Differences under our over absorption, either carry it forward or take it to costing P&L. Cost of sales debited with something from FG, something from selling and distribution overhead, something from administrative overhead, and transferred to costing P&L. Sales is transferred to costing P&L, and costing P&L will give you the profit or loss, which is transferred back to CLC account. Clear? I'm not giving any notes on this. Question 4 is also done. We have already written notes on this. What are the journal entries under your non-integrated system? What is integrated accounting system? Now we know it, but I'll still give some notes on this. Integrated accounting system are where you are maintaining both the set of books together. You are trying to maintain both the set of books together. Objective is I should be able to get cost of a product or a service. I'll be recording interest as an expense in integrated system, but that will not be considered in cost per unit calculation. I'll not consider interest, dividend received, dividend paid. All that I will record it, because I cannot miss out on recording them. It should give me both information, so that cost sheet is also prepared. And in fact, every problem in cost sheet, if a trial balance was given, From the trial balance, we were preparing the cost sheet. Trial balance gives you all information, not in this chapter. When we did cost sheet, if the we did one problem with trial balance. So the trial balance is something which comes from your financial accounting. So financial accounting wants certain information that has to be recorded. Along with that, extra recording needs to be there. Oh, sorry, that is one part. Using that information, I can prepare my cost sheet. Separate within the system, it will be automated in the system. Manually, no preparation will be done. It will be automated. So, no need for reconciliation, less efforts, less time consuming. The only problem here is when you are trying to implement this together, when you're trying to implement your financial system and your cost accounting system, there needs to be a good amount of coordination between the staff responsible for financial and cost accounting. If that coordination is missing, it can be a problem. Also, integration, somebody will say that I will try to do integration only till primary cost. That is, primary cost is maybe the main cost would integration will be there. Balance cost integration may not be there. Practical world, most of the companies follow integrated accounting system. There's no concept of non-integrated. In the integrated accounting system, automatically the cost sheet will come. It would be formatted, it would be automated in such a manner that all information relating to costing will come. Another issue with integrated, one issue with integrated is you cannot record your notional item. Notional transactions cannot be recorded. Your notional transactions cannot be recorded in integrated books because you cannot, you'll have to separately bring it in the cost sheet. But in your books of accounts, you cannot record it because in my trial balance or in my ledger, I cannot write a notional transaction. So that transaction may not be get or may not get recorded in your books of accounts. Now write integrated accounting system. Single system for both financial and costing records. Single system for both financial and costing records. Financial and costing records. Financial and costing records. All transactions relating to assets, liabilities, incomes, expenses, all transactions relating to asset, liability, income, expenses are recorded. System will give information. System will give information to compute financial profit, as well as cost of product slash service, clear? Benefits, no need for reconciliation, economical. Why it's economical? Because you're not maintaining separate books. So when you maintain single set of books, you will need lesser number of people. No need for reconciliation, economical. Issues, perfect or proper coordination is needed between accounting, cost accounting and financial accounting staff. Practical world, whichever organization is following costing system, not many organizations follow costing records because it's not mandatory. Smaller companies will not get major benefit. All the bigger companies do maintain it, and they'll go under integrated accounting system. No separate recording for one system and separate recording for the other system. Single system will take care of this. Any doubts? Clear? Can you proceed? Why reconciliation is needed? I think I've already given notes on this. When the cost and financial accounts are kept separately, you need to reconcile. Reasons were items included in financial account but not in cost account. I had given certain examples. Items included in cost account but not included in financial account, and there was a format for doing this reconciliation. So this part of it is already done. I'm not giving any note on this question. So if you see here, theory is not that much. That is how every chapter will be now onwards. Major chunk of the theory were the initial set of chapters and the 15th chapter. 15th chapter also has a lot of theory. So we have kind of discussed this. Any doubts on this chapter? I'm done with this chapter. I'll be moving to the next now. Any doubts on this chapter? Anybody has any doubts? I'll let you know. Let's come to question one. What is unit costing and explain in which industry it is used? We have already gone through this. Unit costing is used where output is identical, where the output is identical, are technically called homogeneous product, where the output is identical, technically called homogeneous product, and each unit of production requires identical cost. Cost per unit is total cost of production by number of units produced, and it is used in industries like paper, cement, steel, mining, breweries. Explain the cost allocation procedure in unit costing. What is cost allocation procedure is? How are you going to get the cost per unit? So in a practical world, this is not only for this industry. In a practical world, if somebody wants to know what is the material cost you incur, material cost, you'll have to go back to materials chapter. In materials chapter, you would have learnt that for issuing a material, whenever an user department wants a material, they'll have to give a document called material requisition note or a material issue note. So when you analyze your material requisition note or material issue note, you will get to know how much raw material cost has been incurred. Cost of material are collected from material requisition notes. How will you get the labor cost? In the labor chapter, you learned that there are two ways of maintaining labor cost. One is called as a job card. One is called as a job card, where what happens is, in the job card, what is going to happen is, you either record it employee wise or record it job wise. So I can go through the job time cards or the time sheets to identify how much labor cost has been incurred for a particular job. Overheads, you will have to go back to what you learned in overheads chapter, where we will have to follow some absorption basis. What can be the absorption basis? Machine hour, labor hour, percentage of wages, percentage of direct material, percentage of prime cost. We have certain basis which we learned, that any of them can be used as a basis here. Let's start. Theory notes. This will go in your theory material. Theory notes. Cost allocation procedure. Cost allocation procedure in unit costing. Cost allocation procedure in unit costing. In unit costing, allocation procedure in unit costing. Material cost. Material cost. This would be collected collected from this would be collected from material requisition notes. This is not for this industry alone. Every method of costing, this only you will have to do. Material requisition notes, MRN, which an user department will have to issue whenever they want a material. Whenever they want any material, they'll have to issue a material requisition note from their stores department to the manufacturing department. Material cost, labor cost, labor cost. This would be collected. This would be collected from job cards or timesheets. Job cards or timesheets. The job card will indicate how much time every person has worked on a specific job. So using that, I'll get to know how much is the labor cost for a specific work. Overheads absorbed on the basis of absorbed on the basis of suitable base. We are not writing what is suitable base. We know what can be the suitable base: machine hours, labor hours, prime cost, material cost, wages cost. A lot of base are there. Any of them can be used as a suitable base. Material cost, collect from material requisition note. Labor cost, collected from your job cost. Overheads is through suitable base. Any doubts? Clear? Next is treatment of spoiled and defective work. In case any spoil or defective work happens, again I've already seen this in materials chapter. In the materials chapter, in the end, you would have learnt about spoilage, defective, rejection, all that you would have seen. Again, the concept remains the same. If it's a normal reason, you will have to absorb it to the entire output, and if it's abnormal reason, you will have to take it to costing P&L account. If it's an abnormal reason, take it to costing P&L account. And if it's normal reason, if it is normal reason, then what you need to do is, in your effective good units, you deduct this and write it in the denominator and absorb it in the good units itself. Absorb this in the good units itself. Now, treatment of, in fact, if you remember, this is what we wrote here. This we had written it in the earlier chapter. Spoilage, finished product which is badly damaged and cannot be rectified. Defective, finished output which is damaged and can be rectified. This is what we wrote there. The treatment part remains same. If it's a normal reason, what we do, and if it's an abnormal reason, what we do. Normal shortage treated as overhead, abnormal shortage taken to costing P&L. The rule remains same. So normal, spoilage and defective, treatment of spoilage and defectives, spoilage and defectives, normal reasons, cost of rectification. What is rectification is, defective can be rectified, spoilage cannot be rectified. Cost of rectification or loss is absorbed by good units. Normal reason, cost of rectification slash loss is absorbed by good units. Abnormal, abnormal reasons, charge to costing profit and loss account, charge to costing P&L account, charge to costing P&L account, normal absorbed by good units, abnormal will be charged to your costing P&L account. Clear? What is batch costing? We have already explained. So batch costing basically I'm going to use in those industries where the manufacture happens in predetermined lots. Predetermined lots. Costing procedure is going to be remain same. Your material cost will be on the basis of material requisition. Labor cost will be on the basis of time spent. Overheads would be on the basis of suitable base. So what you can do is in the heading cost allocation procedure in unit slash batch costing. As I said, it can be used in any industry. Unit costing slash batch costing. Unit slash batch costing. Any industry, the same approach is what we are going to follow. EBQ again, I don't have any much to write in the theory part. EBQ is some we discussed in the theory notes. Product is produced in batches or lots, and hence the lot size will be very critical. Our objective is to minimize the total of these two: setup cost and holding cost. 2 into annual production into setup cost per setup divided by carrying cost per unit. We have already written the formula here, so I'm not writing it again. Already we have covered. This is the best quantity to produce. Differentiate between job costing and batch costing. Now it's a question which has come many times, but till now job costing is not fully introduced to you, but still I'll explain the difference. Job costing, what happens is wherever we are doing customized work. What is customized work? Is some specific requirement you have. You want to buy a car. Maruti sells a standard car. That is a whatever standard car they are selling, they may do costing of that on the basis of unit costing or any other method. But if you are going to tell them that you want a car with certain specification, you have your own condition saying that car should be like this, it should have these features, you're adding lot of things, you're removing certain things. When a customized work is done for any customer, whenever we do customized work, we follow batch costing. Sorry, we follow job costing. Any customized work. For example, Bharadwaj Institute is taking standardized classes for all of you. But if some student specifically asks us that saying that we want you to take specifically these things one on one, then we'll follow job costing, because for that job, how much is the cost incurred? So cost is determined for each job. This is determined for entire batch, used for non-standard or non-repetitive product or service. Here it is used for homogeneous, which means identical. Again the same point is repeated here. Each job is unique and different from each other. Products are homogeneous and lack individuality. You will not see any difference between one product and the second product. Now right, job costing versus batch costing. Job costing versus batch costing. Job versus batch. Job costing is used for non-standard work, in bracket customized, non-standard work, in bracket customized, and batch costing is used for batch costing is used for and batch costing is used for this is used for non-standardized work, is used for standardized work. Batch costing is used for standardized work. So one is used for non-standard work, other one is used for the standardized work, or you can say is used for homogeneous production. Sorry, used for homogeneous production. Homogeneous production. Costing is done per batch. Costing is done per batch, per job versus costing is done per batch, per job versus per batch, per job versus per batch. Clear? This kind of takes care of the this chapter. Theory was not that much, even problem solving was not that much in this chapter. We are done with volume 1. Technically 8 chapters are over. I'll be shifting now to volume 2. Any doubts? Any doubts in this chapter? Okay, let's discuss the theory component. I think again a chapter where theory is not that significant. We have now reached a stage where you will not see much of theory being there. Most of the chapters, it's going to be very simple discussion we are going to do. Let's start. What is job costing? I think that's already written by us. We'll just discuss it again, but it is already written. Job costing is basically where the work is done according to the customer specification. Here, every job or unit of production is treated as a separate entity for the purpose of costing. You do costing per job or per order or per customer is used in industry where the work consists of several separate contract jobs or batches, each of which is authorized by a specific order or a contract, is treated as a separate entity. Batch production basically is of the same character as the job order production, difference being only in the size of different orders. What is batch order is you do more than one unit. Job order is normally specific, whatever is the quantity they want. Examples they have given. Explain when job costing is used. This 1 and 2 is already written by us. In fact, we wrote here job costing is used in those industry where work is customized to user requirement. So here when jobs are executed for different customers according to their specification, when no two orders are alike, they are unique in nature, there is no comparison between the two orders, need special treatment, where the work in progress differs from period to period on the basis of number of orders in hand. Question 3 is already written there. When did I write answer of question 3 is, we have written question 3 notes in the earlier chapter, unit and batch costing. How will you collect the material cost? Material cost is going to be collected from material requisition note, or technically called stores requisition note. How will you get the labor cost? Using the job time cards or sheet. So if you see here, this notes is already written here. Cost allocation procedure, you wrote unit / batch costing. Technically in that space go and write job costing also. This is the same for job costing. In that space go and write job costing. In the earlier chapter unit costing, batch costing, job costing. Unit costing, batch costing and job costing. The allocation procedure is going to remain same. Unit costing, batch costing and job costing. Flip. Overheads is going to be absorbed on the basis of specific base. Treatment of spoilage and defectives in job costing. Broad category remains same, but they have categorized into multiple things, but broad is same. Normal reason absorbed by good units, abnormal reason transferred to costing P&L. This is a short note we wrote here. Treatment of spoilage and defective, cost of rectification or losses absorbed by good units, charged to costing P&L. Here they have given multiple category. I'll write all the category and given note, but broad remains the same. Where a percentage of defective work is allowed in a particular batch and it cannot be avoided. If you cannot avoid something, it is a normal reason. It is because of normal reason. Whenever we are doing work, this is 100% going to happen. So they have given first the definition: spoiled work that has been totally rejected and cannot be rectified. This notes I've already given when we did materials chapter. Defective is something where you will incur a rectification cost and make it as a good product, or sell it as a something like a seconds product. The companies will sell that as a seconds product. The cost of rectification will be charged to whole job and spread over the entire output of the batch. That is, the good units are going to absorb this cost. If you see, we wrote cost of rectification is absorbed by good units, normal reason. Where a defect is due to bad workmanship, that is, my employees have not done it properly, charge it off as a loss to costing P&L. Where defect is due to the inspection department wrongly accepting incoming material of poor quality. Now what we are trying to say is, in a manufacturing company, if you, that's basically garbage in garbage out. If you're using a bad quality raw material, you're only going to get a bad quality end product. So they are saying the reason is inspection department did not properly check the raw material. The inspection department did not properly check the raw material. This could have been avoided. They are saying this is also a loss only, but you charge it to the inspection department, will be charged to the department and will not be considered as cost of the manufacturer. However, being an abnormal cost, this would be ultimately be transferred to costing P&L. So broad categories only two: normal reason, abnormal reason. Normal reason absorbed by good units, abnormal reason transferred to costing P&L. We can write it in a roundabout manner. Three scenarios they have given, but technically it is the same thing. Write in your theory part. Theory: treatment of spoilage and defective. We have anyway already written this, so technically I'm just writing it again. Treatment of spoilage and defectives. Normal reasons such as allowed loss, charged as cost of the job, and absorbed by good units. Normal reasons such as the allowed loss. Every company will have certain provisions saying that this much loss we allow. Normal reasons such as allowed loss. Bad workmanship, charge to costing P&L account. Bad workmanship, that is, my employees did not work properly, charge it to costing P&L. Bad workmanship, charge to costing P&L. Negligence of inspection department of incoming material. The raw material which came in, you did not properly check that. The raw material was not properly checked. Negligence of inspection department of incoming material. Charge to inspection department. And ultimately transfer to costing P&L account. Negligence of inspection department, charge to inspection department, ultimately it has to go to costing P&L. Ultimately, it has to go to costing P&L. Clear? Any doubts on this? Any proceed? Next, what are the advantages and disadvantages of job costing? Nothing much for me to discuss here. All this will be self-explanatory. Details of material, labor, and overhead cost is available for control. That is, job-wise, you'll be able to calculate material, labor, and overhead cost. This is not job costing alone. Be it batch costing, be it unit costing, be it normal cost sheet. Everywhere we do this. Profitability of each job can be derived. This is very critical. That is, when you follow a job costing, I'll be able to calculate. For example, I'm doing interiors business. In interiors business, I'll be doing contract for 20 different people. So I want to know whether I'm making profit in every contract or not. Whether I'm making profit in every interior contract I'm doing or not. That I can do by calculating the profitability or a cost sheet of that interior order. Customer A, one cost sheet. Customer B, another cost sheet. Customer C, another cost sheet. So customer wise, I can find out the profit. Facilitates production planning. What is facilitating of production planning is when you are aware of how many jobs you are going to do, you'll use that information to plan your manufacturing activity. Budgetary control and standard costing, both are interlinked. Okay, if you want to do any planning exercise, you will have to technically involve something called as budgetary control. You learn that in chapter 15, but without budgetary control, there's nothing like a planning process which can happen. Standard costing goes along with that. Spoilage and defectives can be identified and responsibilities can be fixed. The earlier answer which you saw, 3 reasons can be there. Once you find the spoilage and defective, normal reason, abnormal reason. In abnormal reason, we can have 2 different scenarios. Then disadvantages, costly and laborious method. For example, if Bharadwaj Institute technically wants to follow, let's assume we are giving different classes to every student. We are not giving same set of classes. We are doing specific work for every customer. So if I have to prepare cost sheet for 50 different students, it is going to be a very time consuming exercise for me. So many a times I don't want to get into this individual calculation. Let me do overall profit statement and close it. I don't want to know individual customer wise profitability. Lot of clerical processes involved and hence chance of errors is there. This is removed now. Okay, this error does not exist anymore because now it is automated. Everything happens in system. Earlier what used to happen is everything used to be done manually. People were writing manually. So when you put a total, you make a total mistake. So many calculations were done. So this error technically is not required. Not suitable for inflationary condition. This is an issue not with job costing. This is a general issue with costing. What is inflationary condition is, I did my planning based on the last year. I said OAR is 4 rupees per hour. I recovered customer 4 rupees. But because of inflation, 4 has now become 4 rupees 50 paise. Because inflation cost will keep going up. So if you are using historical data, if inflation happens, the historical analysis is of no use. They are saying previous record of cost will be meaningless if there is a change in market condition. So prices can go up because of inflation. Prices can also go up because when COVID came in, using job costing, you cannot fix your price and all. Because at that time of COVID, people's expectations were totally different. You cannot go back, go to your historical data and try to fix price on the basis of that. So point 3 and 4, except for point 1 or point 2 does not exist itself in practical world. 3 and 4 is not only for job costing, that can be for unit costing, batch costing, wherever you use your traditional method of costing. All right. Job costing advantages and disadvantages. Advantages and disadvantages of job costing. Advantages and disadvantages. Advantages. Facilitates production planning. Facilitates production planning. Facilitates production planning. Plus job wise profitability. This is the most important part. You'll get to know job wise profits. job wise profits, detailed breakup of cost, and hence better control. Detailed breakup of cost and hence better control. Hence there is going to be a better control. Disadvantages: costly and laborious method. Laborious is a lot of calculation needs to be done. Costly and laborious method. Possibility of errors. Possibility of errors. Not useful under inflationary slash changes in market condition. If market conditions are changing or inflation is there, it will not be useful. The utility goes down under inflationary and changes in market condition. This is nothing specific to job costing. Technically, it's there for everything. I say material as talked about in job costing. I've written it in job costing, but there's a disadvantage of costing as a whole. Any doubts? Distinguish between job costing and process costing. Again, process costing is not touched upon for you fully, but the crux is very simple. Job costing is used when work is done according to customer requirement. Process costing is used when a product goes through series of processes, where the product goes through series of processes, process 1 to process 2 to process 3 to process 4, process 5 onwards. So here what you do is you determine the cost for every job separately. For every job separately. Here you try to do it on the basis of each process. Here you do it for every process. You learn about process costing in some time, where we'll do it process wise cost calculation. Every job is unique. Here products manufactured are homogeneous. Here it is unique. Each job is unique and hence managerial control is required for effective control. See, whenever work is, for example, if I'm going to do the same stuff for every customer, the top management involvement is not required much. For example, if I tell my employees that this needs to be done for all 50 students, they'll end up doing that for all 50 students when the same work is done. But when things are changing, the requirement of the top management to intervene will keep coming. For example, if I tell you to solve 50 problems, I give first problem exactly same as the next 49 problem. My intervention is not needed for you to solve those next 49 problem. But every problem has certain unique adjustments where there is customization happening. You need more of top management involvement. It is nothing to related with the difference between job costing and process costing. It is the difference between the product which is getting manufactured. It is more of the product. Here you are doing customized work. Whenever customization happens, I need the top management to be involved. Here I don't need the top management to be involved. Clear? Any doubts on this? Let's start. Job costing versus process costing. Versus process costing. Costing per job versus costing per process. Costing per job versus costing per process. Customized work versus standardized work. Customized work versus standardized work. extensive management control versus limited management control. Extensive management control versus limited management control. Extensive versus the limited control. Clear? Any doubts on this? You were kind of done with this chapter then. I'll quickly discuss the theory then. We'll discuss the theory now. Not much is there. 8 questions are there in theory. In that also, some of the questions I've already given notes. Like question number 5, what is equivalent unit, steps to be followed in process costing, all that notes are already given. Accounting treatment of normal abnormal loss, all that notes have already been given. So let's start going through this. First is, what is process costing and explain its application. Process costing is basically going to be used when the raw material goes through various processes and the output of one process becomes the input of the next process. At the end of every process, a distinctly identifiable new product emerges. That's the important word. Distinctly identifiable new product emerges. That is, you can feel and say that this is a different product. So process costing is a type of costing under which the basic raw material goes through distinctly identifiable process. At the end of each process, a distinctly identifiable new product emerges. Output becomes the input of the subsequent process. There are certain industries where we use a steel industry, paper industry. Steel also goes through something called a single costing. So different multiple approaches are possible. Paper, medicine, soap, chemical, rubber, wherever you are taking more than one process to complete manufacturing. Now in your theory note, right? Theory notes. Process costing. Process costing used in those industries where raw material goes through multiple processes at the end of each process. It distinctly or right unique, a unique product emerge. Unique means you can differentiate. Unique product emerges. Examples: steel, paper, whatever they have given, let's write them. Medicines, soaps, chemicals. Few industries we have mentioned: steel, paper, medicine, soaps, chemicals. We can keep adding more industries also. What are basic features of industries which use process costing? Predominantly going to be same as what we have seen earlier. Basic feature is very simple. It has to go through multiple process. Each plant or factory is divided into a number of process, cost center or department, and each subdivision is a stage of production or process. Manufacturing activities carried on continuously by means of one or more process run sequentially, selectively, or simultaneously. What is sequentially? Is process 1 happens, then process 2 happens, then process 3 happens, then process. Selectively means you do process 1 and process 3. Process 2 you will do it later. That is why, how will you do it later is, process 2 would have been done for some material, that metal would have gone to the next process. Process 2 is taking a rest now because process 1 has not given them the material. So process 1 takes rest, at that time process 2 starts, process 3 takes rest, process 4 starts. That's their wish, or simultaneously. So whatever way they want to do. The output of one process becomes the input. The end product usually is like of units not distinguishable from one another. That is, what is not distinguishable from one another is the last process, whatever you are producing, they are homogeneous in nature. What is homogeneous is the output is the same. It is not possible to trace the identity of one particular lot of output to any lot of input material. What is this tracing is? You produced some sugar. Now you want to know the sugar came from which lot of sugar cane came from, because the sugar is waste, some issues there in the sugar. So I want to know which raw material was used, that you cannot identify. This normally happens. Lot tracing is very critical in automobile industry. In automobile industry, what will happen is, they manufacture a car, they'll give a lot number to it. They identify an issue with one car. They say there is some issue with one car, they understand the reason could be maybe some issues there with brakes, some issues there with whatever is the issue. Once they identify, they will go back to which lot of raw material was used and do a recall of all that cars. You could see in automobile industry, they'll do something called as recall. What is recall is, they'll say please come back to us, we will repair this and give it back to you. Because moment they identify, because they do lot of checking, but after checking also, when consumer is using it, there can be some issues which happen. Once they find, because safety problem is there, once you identify issue with one car, you want to do tracking of that lot. This lot tracking is not possible in case of process costing, because you are going through multiple processes, so you cannot go back in which process the raw material was used. Lot tracing is not very critical in many industry, but it's very critical in industry like automobile. Automobile does not go through process costing because there you do not have multiple processes. Now write features. Output of one process becomes input of next process. Output of one process becomes input of next process. Whatever points I've written earlier, I'm not writing them again. That is, goes through multiple processes. Lot tracing is not possible. Lot tracing is not possible. I cannot go back and tell from which lot, which raw material came, or from which lot this FG was manufactured, because it goes through so many processes. Lot tracing is not possible. Otherwise, kind of okay, other points are written. What is they saying is, production of a product may give rise to joint and or byproduct. When you are manufacturing a product, you will understand about joint and byproduct costing in the next chapter. There can be a link between process costing and joint and byproducts. I'll explain there. Whatever product we are manufacturing, there can be joint product or byproduct. You can just write production can be of single product or joint slash byproduct. What is joint and byproduct? You'll understand later. Can be of single product or joint slash byproduct. Joint slash byproduct. Clear? 3 we have already discussed, so I don't, it's more of a steps to be followed in process costing without equivalent units. We have already written notes on this. 4 accounting treatment entries are also written by you. I have already given the entries. Equivalent unit steps to be followed in process costing, we have already given. The steps could be slightly different here because I have changed the order and all. So follow what I have given. The steps in some of the answers, these steps would have been followed. Broadly the same thing, ordering has been changed. And this is what I would have given you, the changes, what changes used to happen in every step, that was also given to you. Again, the ordering of the step is different, so don't follow this, follow what we have done in the, or what you have written in the notes. Which method to adopt for WIP valuation? I've already given notes on this also. If the breakup of opening WIP in various costs are given, average stock method is used. DOC is given, FIFO method is used. If both details are available, then either of the methods can be used. So now onwards, you will not see major theory question. Most of the chapters, theory will not be that much. What are inter-process profits? I've already given you. Maybe I did not talk about the advantages and disadvantages at that time, but I've already explained. In some process industry, output of one process is transferred to the next process at market value or cost plus a percentage of profit. The difference between the cost and transfer price is known as inter-process profit. What are the advantages? Advantage is very simple. I'll calculate profit of every process. When I calculate profit of every process, they become more efficient. They become more efficient. Disadvantages, it can involve complication. What is complication? Is when you did your calculation, you saw some amount of profit had to be removed, some closing stock undervaluation or some closing stock profit element was there. All these are extra complication we are bringing in accounting. We can just do normal approach, but normal approach has a challenge. The challenge is very simple, that is, you are not able to measure the efficiency of every process. In the practical world, these complications are all not that high. Earlier, manual accounting was done. When manual accounting is done, it takes a lot of time, but when you automate things, things are fairly simple. Now just write advantages and disadvantages part. Advantages and disadvantages of inter-process profits. Advantage process wise profit can be computed. Process wise profit can be computed. Hyphen improves efficiency of process. Improves efficiency of process. Disadvantages. Disadvantages, accounting complication, accounting complication, plus elimination of profit on closing stock. Unnecessary requirement of doing all this, elimination of profit on closing stock. Clear? What is operation costing? Again, kind of simple thing, is used when an entity produces more than one variant of final product using different material but with similar conversion activity. Operation is also known as hybrid product costing, as material costs are accumulated by job order or batch wise. Some of the industries they have mentioned. In simple words, operation costing is a subpart of process costing, where you will produce, they're saying more than one variant of final product, that is you are producing different products and using same raw material or mixing multiple material, using the same raw material or mixing. Operation costing is used when an entity produces more than one variant of the final product using different materials, using different material but with similar conversion activity. That is, it will go through the same set of operation or same set of, you have raw material 1 which will give you variant 1 product, raw material 2 variant 2 product, raw material 3 variant 3 product, raw material 4 variant 4 product. An operation is considered to be a sub part of a process. All right, operation costing. Operation costing. Operation is a part of process. Is a part of process. It is used. It is used when an entity manufactures more than one variant of product, more than one variant of end product using different raw material, but with similar conversion activity, in bracket operation, similar operation. You're going to use similar operation but different raw material. That's okay. The second part is also known as hybrid costing. Hybrid costing is your material, you will do job costing, separate job you'll do. But for your conversion cost, they're saying you may follow process costing. You may follow, because you're using the same process for every product. Material costing you want to do separately through job costing method. Just write the example alone. Ready-made garment. Why ready-made garment is, you will have different designs of shirts manufactured, are different variant. Some will be only cotton, some will be cotton with polyester, some will be cotton with some other fiber. You can mix and also manufacture the product. Shoemaking, jewelry, same logic. Okay, your shoemaking, you can have different variants of shoe, and jewelry also different variants can be there. Clear? Any doubts on this? So I'm done with process costing. We'll take a break now. In the next session, that is not today's session, whenever next session I have, I'll discuss the homework of process costing. Now will be after the break, move to the next chapter. Any doubts on process costing? Clear? Alone. First is, what are joint products and byproducts? It's already explained to you in few questions. What is joint product and what is byproduct? What is the difference? Guys, can I start with this? If you're still doing the previous questions, let me know, I'll wait. Can we start discussing the theory question? You want to practice your previous questions, complete it. Anything pending, let me know, I'll wait for a minute. Can we start? Okay, what is joint product? What is byproduct? Tell me. Don't look at the screen. Tell me, what is joint product? What is byproduct? We have done so many problems. Guys, sorry? If you have almost equal economic significance, they are called as joint product. One product has higher economic significance, another product has lower economic significance, then the higher economic significance is called main product and lower economic significance is called byproduct. Notes on this was already written by you. If the products have equal economic significance, they are called joint product. If the economic significance is different, then product with higher economic significance is called main product. Product with lower economic significance is called byproduct. What are co-products? Co-products is something which is not going to be used to solve a problem. Joint and byproducts, joint and co-products are used synonymously, but they have some distinction. Co-products can be defined as two or more products which are contemporary but do not emerge from the same raw material in the same process. For example, I am want to construct a house. For constructing in house, I wanted to do the interiors. For interiors, I need different classes of timber or ply. It's called technically wooden ply. So this can come from tree 1, tree 2, tree 3, tree 4. When I sell, normally I'll sell all this together. I'll sell all this together to the customer because he wants to use different shades of ply or different designs of ply in his house construction. He doesn't want to use the same design. He wants to use different design, but they are not joint product. Though they are sold together, but they are not manufactured together. Co-products are those which are normally sold together, which you normally sell together, but they do not come from the same material or the same process. Example they have given: timber board from different trees. We have different grades of trees in the practical world. So different trees would be used to manufacture that wooden ply. So some would have come from tree 1, some would have come from tree 2, some would have come from tree 3. What is joint product is, you want to manufacture product 1, you cannot manufacture without product 2. Joint products are those which are manufactured together, may or may not be sold together. They may not be sold together. Co-products are normally sold together but not produced together. They are not produced together. Now write in the theory notes. Theory notes. Co-products. Co-products are those products which are related which are related but not produced from the same from the single raw but not produced from single raw material. Example: timber boards from different trees. Most of the times these could be sold together. It's not mandatory that they have to be sold together, but many a times you will sell 2 or 3 varieties together to the customer so that he can use all those designs in his house. But they are not produced together. They are not produced together. Joint products are those which are single raw material leads to production of 2 or more products. Clear? Any doubts on this? Third, I've already given a note. What is split off point? Notes is already given to you. The point at which the product emerge with separate identity is called split off point. Any cost which you incur till the split off point is called joint cost, and any cost which is incurred after the split off point is called further processing cost. We would have written notes on this also. The point at which two products emerge is called split off point. Cost incurred till split off point is called joint cost, and cost incurred after split off is called further processing cost. The crux of joint and byproduct is distribution of joint cost among the various product. Then I gave some 4 steps also, which is the next question. What are the steps to be prepared? Profitability statement, identify joint cost, identify ratio, distribute the joint cost, and prepare a profit statement. Again, we have not followed these steps in every question. Initially, I followed the step. Later on, I said, let me do it directly. Various methods of distribution of cost, already written note on that also. We have already written the various methods of distribution. In your theory notes, you have already written that. Physical units method, joint cost is distributed in the ratio of number of units. NRV method, here you distribute on the basis of NRV. Whatever is the method name, that is the basis. How you calculate NRV? Sale value after further processing, less further processing cost, less selling and distribution cost, less estimated profit margin. Technical estimate is survey or technical evaluation, where you do units into points. Market value at the point of separation. At the point of separation means at split off. Sale value at split off. Market value after further processing means sale value after further processing. Contribution margin method. Contribution margin method, where you distribute the cost into variable cost and fixed cost. Variable cost on the basis of physical units, fixed cost on the basis of contribution. There's another method which says average unit cost method. This method, and this is technically same, physical units method and average unit cost method, technically both are same. There is no difference. Only thing is, when you do physical units method, you have 10,000 liters, 20,000 liters, 5,000 liters, all the three are addable. When you do average unit cost method, some are in liters, some are in kg. So what you are saying is, let me ignore this liter, kg and all. I'll just add the number and then do the distribution. So you will have the total cost divided by the units produced. Divided by the units produced. The unit could be, some unit could be in kg, some units could be in liters, some units could be in some other unit of measure, but still you want to do it. That is what you do in physical units method also. You just distribute on the basis of units produced. Average unit cost also distribute on the basis of units produced. Okay, I think we have not written this. Now write selection of method. Which method to be followed? Which method to be followed? Whatever I'm writing here is more from a practical point of view. In exam, ICA hasn't been consistent. Many a times they have followed sale value at split off method. Now write when selling price, when selling price of all product is uniform. When you are selling almost at the same price, when you're selling almost at the same price, they are saying follow physical units, because in physical units the cost per unit is same for all the three products. Whatever product you are distributing, you can look at any physical units problem. The cost allocated per unit, for example, we did physical measurement method, 100 quintals, 150 quintals. 4,800 by 100 is 48. 7,200 by 158 is also 48. So under physical measurement method, the cost per unit is same for all the products. So they are saying if selling price is same for all the product, let the cost price be also same. Similar, not exactly same you will get, but it's almost similar. Then you can follow physical units method. This is more from practical point of view. In exam, I'm again repeating, ICA has not followed this. So write physical units method. Physical units method. When realizable value at split off is not known. Now let me explain. The selling price is not similar for all the three products. So you said physical units is not possible. Then I asked, what is the realizable value at split off? He says, I don't know the realizable value at split off. I don't know what is the realizable value at split off. If I had known, I would have tried that approach. Realizable value at split off is not known. You know only the realizable value after further processing. They're saying, so from further processing, deduct your further processing cost, deduct your selling and distribution cost, and get the NRV. NRV is basically the likely selling price at split off. It is likely selling price at split off. So here they have said NRV method. NRV method. Clear? Then when further processing cost is incurred disproportionately, what can be the use of this notes is this can come as an MCQ to you. It can come as an MCQ in exam saying that the company has uniform selling price for all the product. Which method of distribution is to be followed? It can come as an MCQ in exam. So that's the use of giving this notes. See, you have incurred further processing costs. One product very high, another product very less. So when you're incurring different processing cost, when for one product you're incurring very high cost, for one product you're incurring very low cost, they are saying let's not worry about the NRV, because in NRV you'll have to subtract the further processing cost. If you know what is the value at split off, sale value at split off, do distribution and close it. After that what happens, I'm not bothered. After that, whatever extra cost you incur, that you consider in every product. But if you are incurring disproportionate cost, if you're incurring disproportionate cost, because disproportionate cost means some product will have higher cost, some product will have lower cost, that will impact the NRV, that will impact the NRV. So here sale value at split off, provided you know the sale value at split off. If you don't know the sale value at split off, go with NRV. Sale value after further processing we have used very rarely. I can use that only if all products require further processing. If all products need further processing, then only I can incur that, or I can use that method. Many a problems we have seen, one product is not using this, or one product further processing is not needed, two products further processing is needed. So in all those questions we have not gone with sale value after, only the initial question we have followed sale value after further processing. When all product require further processing, and when all product required further processing and FPC further processing cost is incurred proportionately. Proportionately means almost equal for all, is incurred proportionately. If you are going to incur disproportionate cost, go with sale value at split off. Proportionately means almost similar cost, almost similar cost, go with sale value after further processing, sale value after further processing. When products have same unit of measure, write this, I'll explain. Average unit cost method. Technically one and last one and this one is same. Physical units and unit cost method is same. The only purpose of giving this is to answer MCQ in exam, not to solve detailed problem. Detailed problem we haven't been consistent. Okay, I'll just summarize what we are doing here. If selling price is similar, go with physical units method or average unit cost method. In average unit cost also, I would want the selling price to be similar, just because everything is same unit of measure, that is everything is in kgs. You cannot say that I want to use average unit cost, because average unit cost method and physical units method, the cost per unit for all the product is going to be same. So if selling price is same, follow it. If you don't know the selling price at split off, try NRV method. If you know the selling price at split off, you can follow selling price at split off method, provided your FPC was incurred disproportionately. Disproportionate means there is no pattern. I don't want to consider FPC in my calculation itself. If it's proportionately incurred and every product need further processing, go with sale value after further processing method. Technically speaking, NRV is the most suitable method of distribution. But we have not followed NRV in many questions. We have followed sale value at split off. Any doubts on this? The next part is, what are the methods of apportioning joint cost to byproduct? Listen, in my notes I said preferred accounting treatment is compute NRV of byproduct, deduct the same from joint cost, balance joint cost can be distributed among various product. Instead of computing NRV of the byproduct, you can compute 3-4 other items also and deduct that from the joint cost. What are the option? First is NRV. Second is standard cost and technical estimate. What is standard cost and technical estimate is, don't do NRV calculation and all. You can say every byproduct 1 rupee, 2 rupee, 3 rupee, 4 rupee. You put a standard cost. You put a standard cost and deduct that from the joint cost. Byproducts are valued at standard cost, which are determined on the basis of past cost or making some technical estimate. 1 rupee, 2 rupee, half a rupee, that is your wish, but some standard cost you decide and deduct. So I wrote here, no, compute NRV of byproduct and deduct the same from joint cost. Compute standard cost of byproduct, deduct the same from joint cost, balance cost allocated to the main product. Comparative price, value of the byproduct is ascertained with reference to a price of similar or an alternative material. You produced some product, you are looking in the market, what is the price of that alternative material, what is the comparative material, if you find any comparative material, what is the price of that, get that value, deduct it from joint cost, deduct it from joint cost. Reuse basis, what is reuse basis is, you manufacture a byproduct, you are not able to sell this, but you can use this as a proxy for some other material, you can use this as a proxy for some other material. So if you are using this as a proxy for some other material, you will save the cost of that some other material, you will save the cost of some other material. Byproducts can be reprocessed in the same process as part of input, hence in that case the byproduct should be the same, cost should be the same as that of the material introduced in the process. For example, at my home I have a paper, I was doing something with the paper, I got some byproduct. Now this byproduct I can sell it, or I can use it as a proxy for some other product which I was to buy. I was doing some art and craft work, I was to buy some product in the market which is 20 rupees. Instead of buying the 20 rupees product, I'm using this waste, I'm using this waste. So I can say waste is valued at 20 rupees. Waste is valued at, byproduct is technically a waste which can be valued at NRV, which can be valued at standard cost, which can be valued at comparative price, or which can be valued at reuse price. Clear? Next. Now write methods of apportioning joint cost to byproducts. That is, how much cost should you allocate to byproduct? How much cost should you allocate to byproduct? NRV in bracket preferred approach. This is the preferred approach. Standard cost determined on basis of standard cost determined on basis of past data slash technical estimates. Past data slash technical estimates. Comparative price. Price of a similar slash alternative material. Price of a similar slash alternative material. Similar slash alternative material. Reuse basis. Cost of a substitute. Cost of a substitute material. Of a substitute material in bracket byproduct is used byproduct is used as a substitute of other product. Byproduct is used as a substitute of other product. I wanted some other product. Company is saying, why don't you use this waste? Why don't you use the waste instead of buying that some other product? We do this in practical world. At home, you could have done something, some waste would have come. Instead of buying a new product, you will say, I'll use this waste in place of this product. So basically, from the joint cost which you have calculated, you can subtract NRV of the byproduct, you can subtract standard cost of the byproduct, you can subtract comparative price of the byproduct, or you can substitute cost of the substitute of the byproduct. Basically, I'm trying to put a value for that byproduct. Is it 100 rupees, 200 rupees? That 100 rupee could be based on NRV, 100 rupee could be based on standard estimate, 100 rupee could be based on comparative price, 100 rupee could be based on cost of substitute. Clear? Any doubts on this? Next one I've already written. When they are of small value, when they are of considerable value, this accounting treatment we have already written. We have written here. No further processing, decide based on sale value at split off. Further processing, decide based on NRV. If sale value or NRV is of considerable value, then it is like a joint product. If the value is small, it is like a byproduct. Moment you treat it like a byproduct, and none of the problem we have treated it like a byproduct. If you treat it like a byproduct, two options: record as other income or deducted from joint cost. Our preferred treatment has always been compute NRV and deduct it from the joint cost. We have consistently followed that. Any doubts on this? Clear? I'll not be in a position to start the next chapter, so I'll end with this. If there are any doubts on this, let me know. Any doubts on your joint and byproduct costing? We are just left with 4 more chapters. You'll have test on your process costing in the next week. I'll let you know when is the schedule for that. Any doubts on joint and byproduct costing? Complete homework. I'll discuss in the next class then. Let's come to theory part. What are the areas of application of service costing? I think this we have already discussed. There can be internal application, there can be external application. In the internal side, whatever internal services are provided by in-house department, some of the examples they have given is canteen facility in a hospital, boiler house in a power generation unit, vehicles in IT department, research and development, quality assurance. All these are technically in-house department which are there. So costing done for those in-house department can be done through your service costing. And external is very clear. We have seen transport costing, we have seen hotel costing, we have seen hospital costing, we have seen power plant, we have seen toll road. So all these are external costing which is there. I think we have already written a note on this aspect. Service costing is used. It can be applied for valuation of internal services and services provided to external customers. So I'm not giving extra note on this. Next, differentiate service costing and product costing. Again, kind of going to be self-explanatory. See, the main difference is on the type of cost we incur. In a manufacturing, material cost is the primary cost. Whenever you are in a manufacturing setup, material cost is the primary cost which is incurred there. But for a service costing, material cost may not be that much. For Bharadwaj Institute, material is not the primary cost we incur. The primary cost we incur is employee cost. So that is one major differentiating factor between service costing and product costing. Tangibility is you can see products, you cannot see service. Because you cannot see service, there cannot be any closing inventory. So that FIFO method, LIFO method, all that is taken out of the context. They do not come into picture. Cost unit, when we do manufacturing company, we normally follow a simple cost unit. What a simple cost unit is, you do not multiply two factors. Here in a service industry, we follow composite cost unit, where we multiply number of tons with the number of kilometers, number of rooms with number of days, number of students with number of days, number of students with number of hours. So you have multiple factor which can be combined together. Traceability of cost. Service sector heavily depends on support service, and hence indirect costs like admin overheads are significant proportion of total cost. In service industry, because overheads are significant in nature, many service industry may go for something called as activity based costing. They may try to apply ABC methodology, because ABC methodology is a accurate way of getting cost. In fact, operating costing which you see is not a different method of costing. Okay, what is operating costing is, for certain industries, that is service industry, I'm talking about service industry, I may follow the concept I learned in job costing. What is job costing? Is doing customized work for someone. So when I'm doing a customized work for someone, interior decoration is a service. When I'm doing customized work for a customer, interior, which is a service industry, but may follow job costing, may follow job costing. If I'm doing a work where I have to do batch of service together, then I may follow a batch costing. I may follow a batch costing where I have to do a batch. When I do two or three services together, clubbed together, I may follow the concept of joint and byproduct costing. So service costing is not technically a different method of costing. It will use all those concepts here. Now write theory element. Service costing versus product costing. Employee cost, employee cost is the major cost in service industry. Service industry as compared to product cost in, or as compared to material cost, as compared to material cost in manufacturing industry, as compared to material cost in manufacturing industry. Point number 2, write about that composite cost unit. Composite cost unit is used, composite cost unit is used in service costing. Composite cost unit is used in service costing as compared to simple cost unit in product costing. Overheads forms a significant part, forms a significant part of total cost in service industry, becomes a significant part of total cost in service industry. Just give me a minute. Okay. What is a service cost unit? We have already discussed this. The service cost unit is mostly a composite cost unit where we combine two units together. So a cost unit is a unit of a product, service, or a time, or a combination. Different industries and unit of cost is given. Let me know if you have any doubts in any of them. Different industries and cost unit. Any industry, if you have a doubt, let me know. Okay, next is what is key performance indicator. Now, you would learn about this term in strategic management. There's something called as a key performance indicator and a critical success factor. These are two terms which are normally associated with any kind of an industry, but more prominent in service industry. For example, for Bharadwaj Institute to succeed, we need to provide quality education to students. That is our critical success factor. If I'm able to provide quality education to students, we will be able to succeed in the market. How do I measure this? That is called key performance indicator. Example, number of percentage of students passing the exam. If more students are passing the exam, it indicates that we are providing a good quality service. Or the student feedback rating, we take a feedback from you. In the feedback, if we get a good feedback, then it means our service is on the right side. So key performance indicator is a quantitative and a qualitative factor used to assess organizations performance and achieve goal. Different industries have different factor. For example, the first thing they are talking about, uh, average return per user. You will see this term in telecom industry. If at all you read something about telecom industry, they'll talk what is the ARPU. What is ARPU? Is average revenue per user. That is how much am I earning from one user of my mobile phone or my network. So normally is it 200 rupees per month, 300 rupees per month, 250 rupees per month. That is called average revenue per user. So you have different KPIs for different industry. I don't see this getting tested, but in a rare scenario, they may ask in an MCQ saying that bed occupancy rate could be a KPI for which industry, or they can say occupancy rate could be a KPI for which industry. So if you see these terms, this will be more related to those industry. For example, truck turnaround time. So what is turnaround time is, you can understand in different ways. From the time it starts and the time it delivers the product, how much time does it take? That can be understood as truck turnaround time. Or by I place an order and when do I get the truck and when the transportation starts. So different ways of measuring it. In a hospital, I want to measure bed occupancy rate. What is bed occupancy rate is, if I have 150 beds in a hospital, I would want most of them to be occupied. Then only I'll be making profits. Education sector, administrative cost per student, instructional cost per student, student to faculty ratio. The student to faculty ratio is normally a term which people would want to know. For example, in our academy, if I say that for one class there are going to be 150 student and one faculty is going to be there, some student could be comfortable with that, some may not be comfortable with saying that 150 is a ratio I am not comfortable with, I don't want to go to that kind of a. This is normally tested more in a school sector. In a school sector, parents would want to know what is the faculty to the student ratio. In a single class, if there are going to be 80 students or a 90 student and one teacher is going to take a class, parents may not be comfortable with that. So different schools have different norms on that, but normally it's around 30, 40. You will not see more than that, because more than that, if you have in a single class, it becomes difficult for to be managed. So these are the factors which are specific to an industry. You are looking at different industries, different factor. Now write key performance indicator. KPI is a quantitative slash qualitative measure, quantitative slash qualitative measure to assess the performance, to assess the performance, assess the performance as compared to benchmark. It is basically, it is basically used to assess, used to assess the performance against critical success factor, performance against critical success factor. In practical world, these are predominantly used. Every organization would want to, not only for service industry, this can even be used for manufacturing industry, but more prominent in service industry. You will have a critical success factor and see how are you performing against that. Clear? I've already discussed what is composite cost unit, where you club two parts together. That is called as composite cost unit. In that, we learned absolute ton kilometer and commercial ton kilometer. In absolute ton kilometer, we take the respective distance with respective quantity, or technically exact distance with exact quantity, and your commercial ton kilometer is total distance with the average quantity. Equivalent unit. Now, this equivalent cost unit concept can come into picture when you have different rates for different service. For example, we saw a problem where in a school there was a 4 kilometer student, there was a 8 kilometer student, and there was a 16 kilometer category student, and we were charging different fees for different category of student. So when you have different fees for different category of student, you may have to assume someone has x, someone has 2x, someone has 4x. That process is called converting everything into a equivalent cost unit. We're going to convert everything into a equivalent cost unit to calculate cost or pricing of two or more different grade of services which uses common resources. Each grade is assigned a weight and converted into equivalent unit. Converting into equivalent units make them comparable. So we did here, we also did in one toll road problem where we said 0.0x, 0.5x, 0.2x, 0.25x to do the calculation. Now write equivalent cost unit. Equivalent cost unit. This is useful. This is useful in case, in case an organization, in case an organization provides provides two or more different grades of service, two or more different grades of service while using common resources, while using common resources. weights need to be applied. Weights need to be applied to convert them into equivalent units. To convert them into equivalent units. Clear? Last one is something which I have discussed when I did toll road problem: build, operate, and transfer approach. What is build, operate, and transfer? Is first a private party will build the road. Mostly road construction goes through this. After it is built by them, they'll operate it for a specific period. In this operational period, they will recover the cost incurred on building that infrastructure. It is mostly for roads, but technically you can apply for anything if feasible. If there's something else, for example, I want to do a BOT for an airport. If possible, that is also can be done. So some private party will build the airport. It will be operated. During the operation time, they will collect revenues from the airlines, revenues from the customers, and they will transfer it. So governments are increasingly seeking private sector investments in public project through the BOT scheme, where the private sector designs, finances, construct, and operates. After a specified period, ownership is transferred to the government. Ownership is transferred to the government. This is what is mostly done, because for infrastructure development, government cannot put money from their side fully. So they would want some private participation to happen. Now, right, BOT approach. Build, operate, and transfer. BOT approach. This is used in case of infrastructure projects. Used in case of infrastructure projects. Private players would design, construct, operate, and maintain the facility. Maintain the facility after a specific concession period. After a specific concession period, the infra asset would be transferred. The infra asset would be transferred to the government. The infrastructure asset would be transferred to the government. After that specific period has got over, you will transfer this back to the government. Clear? Any doubts on this? This takes care of this chapter. Any doubts on this chapter on service costing? Clear? We'll end, and then I'll move to the next chapter. What is standard cost? This is something we have already seen. There is a difference between standard cost and budgeted cost. Practically speaking, these two terms can be interchangeably used. You can use the term standard cost, you can use the term budgeted cost, you can use the term planned cost, you can use the term forecasted cost. So all these terms are interchangeably used. The only difference is standard cost is always calculated for actual output. The term standard cost per unit, budgeted cost per unit, planned cost per unit, forecasted cost per unit, predetermined cost per unit, everything is same. At a per unit, everything is same. There's no difference. But only thing is the standard cost overall and budgeted cost overall has a difference. Standard cost is calculated for actual output. Budgeted cost is calculated for budgeted output. So standard cost refers to the planned unit cost. Unit is per unit. Unit is per unit of a product, component, service. In case of Bharadwaj Institute, it is service. In case of manufacturing company, it is a product or a component. Standard costs are established to evaluate the performance of a cost center or a responsibility center. A responsibility center can be a cost center, can be a profit center, can be an investment center, can be a revenue center. For our problems, we have just focused on cost center. One problem we did a profit reconciliation. So you can do a profit reconciliation also, you can do a cost reconciliation also, or you can do only sales reconciliation. Sales reconciliation was out of your syllabus, so that's why we haven't discussed it. But I can do reconciliation. Purpose of doing reconciliation is very simple. Control cost and establish selling prices, because once I find the deviations, it will give me an idea as to what is going wrong. Now go to the theory note. You would have written a lot of charts. After the charts, now we are writing the theory part. Theory part. Standard cost. Standard cost. Standard cost refers to the planned unit cost. Refers to the planned unit cost refers to the planned unit cost. Purpose of standard cost. Purpose of standard cost is to evaluate performance. Is to evaluate performance, control cost, and establish selling price. Control cost and establish selling price. Control cost and establish selling price. For example, Bharadwaj Institute, when we told you fees, for telling the fees, the first thing we would have decided is what is the standard cost per student. We would have estimated the predetermined or the planned cost. Without knowing the planned cost, I cannot tell you what is the fees we are going to charge you. So we would have done some estimation. We would have taken a call saying that so many students will be there, so much will be the material cost, so much will be the labor cost. Every problem, the comprehensive question, we started with a standard cost sheet. That is always determined at the beginning of the period. Clear? Any doubts on this? Next, explain the need for standard costing. Now, why should I do standard costing? I've already told you multiple times that I want you to prepare a study plan. Why is that study plan needed? Without having a study plan, you do not know whether you're going in the right direction or in the wrong direction. Nobody knows it. As time passes by, when I started my costing classes and now we are at this stage, you see the gap between your exams. The gap is coming down. As you come closer to the exam, then only that seriousness many a times comes. But if you had a plan in place, you will know whether you are going in the right direction or in the wrong direction. If you are going in the wrong direction, you will take a corrective action. That is what standard costing does. Whether we are going in the right direction or in the wrong direction. So standard costing is a method of costing which measures the performance by comparing the actual with the standard, analyze the variation and reporting of variances. Now, just to give an example, last 1 week we couldn't take class, so it's a variation, but it is an unavoidable variation. So there can be any reason. Now I will not worry about this unavoidable variation, but I've already told you next week we are planning to take class extra half an hour. The reason is very simple. I want to compensate the time which is lost. So unless I have that plan in place, I cannot take all this action. I cannot wait for the last day. If we have committed saying that we'll complete your syllabus by March mid or March end, I cannot go to the March mid or March end and suddenly say no, we are not able to complete syllabus, so we need extra time. So that planning has to be there on a continuous basis. There was some plan on a continuous basis, and that is why that extra half an hour was asked, because I don't want to deviate at the last day. So I want to have my plan in place so that we are able to complete things on time. So standard costing does not end with only computation of variances. It will also extend fixation of responsibility. You will see in one of the question who is responsible. For example, price variance, purchase manager is responsible. Usage variance, production manager is responsible. So somebody is going to be given responsibility for every variance. Following are the benefits of standard costing: prediction of future cost, provide target to be achieved, used in budgeting and performance evaluation, interim profit measurement and inventory valuation. So I'll be able to, most of the times in the practical world, I don't even calculate the actual cost. My profit is very simple. In that problem we did 40,000 units is sold, 40,000 into 8.4 is the profit, because I had my plan. In reality, if you deviate, calculate variances and then see what is happening. Next, need for standard costing. Need for standard costing. Guidance for future performance. Guidance for future performance. And corrective action. Guidance for future performance and corrective action can be taken based on variances. Corrective action can be taken based on variances. Interim profit measurement is possible. Interim profit measurement is possible. Fixation of responsibility for variances. Fixation of responsibility for variances. See, ideal situation, just calculating variance does not help, because after calculating variance, the next step is very critical, which you cannot do it in your when in class. We cannot see that. In a practical world, once variance is computed, you will call the production manager, you will call the purchase manager, understand from him what has gone wrong, either change the standard or see how you can make improvements. So that's the next step. Clear? Any doubts on this? Now, what are the different types of standards? We kept on saying that standards need to be fixed. When we did overheads chapter, in the overheads chapter, if you remember, there was one area where the formula is budgeted overheads by budgeted suitable base. The base can be of different things. There were four forms of capacity: normal capacity, practical capacity, actual capacity, and ideal capacity, or the maximum capacity. So when you fix standards, you can fix different type of standards. Ideal standards is very difficult to achieve. Ideal standard represents the level of performance attainable when prices for material and labor are most favorable. That is, this ideal standards assumes that the cost will be the lowest cost. The cost is going to be the lowest cost. When the highest output is achieved, maximum efficiency and utilization of resources is done. If you consider ideal standards as standard cost, all variances will be adverse. All variances will turn out to be adverse because ideal is the maximum possible performance. So that is like your maximum capacity of your labor of your overage chapter. Maximum capacity is 24 hours working, 365 days working. What is ideal standard is everybody works on, that is 24 hours working, 365 days, whatever you produce you're able to sell, you're able to buy the product at the lowest price. So this is not what is followed as standard. This is not what is followed as standard. Normal standards is standards that are achievable under normal operating condition. If what is, just to give an example, ideal standard is me taking class for continuous 12 hours without any break. Not possible. If I take 12 hours without any break, not possible for me to deliver also, and very difficult for students also. Normal is considering the situation. 12 hours itself is not possible. So normal is okay. We can take maybe a 6-hour class or a 5-hour class. There also we change faculties. We try to do keep it as two different faculty. We also give break in between. That is normal standard. Basic or bogey standard. What is basic or bogey standard is you are trying to keep standards which are remaining constant or unaltered. Constant or unaltered. This is not logical. What is constant or unaltered is whatever the floods happened, the flood would need me to change the standard. The floods would need me to change the standards. I cannot say that I planned something, so please keep that only. I planned something, it is not going to work now, so it will need the standards to change. Whenever basic standards are used, variances are not calculated, but the actual cost is expressed as a percentage of basic cost. Whatever was your planned cost, you express it as a percentage. Ideally, we do not follow this. Either this or this. Current standards, this reflects the management's anticipation of what actual cost will be for current period. Variances arising from the expected standards represent the degree of efficiency and usage, variation in prices paid for material, and difference. This is what will mostly be used by organization. Current standard. So what was my standard 1 week back or maybe 2 weeks back? Ideally it would have undergone a change for the last week, because you know what happened in the last week. So you cannot keep working with whatever was the plan. Now write different types of standards. Different types of standards. Ideal standards. Standards which are achievable when company works at maximum efficiency, procures resources at lowest cost. Normal standard. Normal standard. Standard which is achievable under normal operating conditions. Standard which is achievable under normal operating conditions. Basic standard. Basic standard basic standard, standard which remains constant, which remains constant and is not altered, which remains constant and is not altered, which remains constant and is not altered. Clear? Next is current standard. This reflect management expectation, management expectation of the performance, management expectation of the performance, and this is used, and this is used as standard for performance evaluation. This is what is preferred. This is used as standard for performance evaluation. Used as standard for performance evaluation. This is what is preferred by organization to use for performance evaluation. Clear? Any doubts on this? You can even go with normal, but this is what ideally they'll do. Process of standard costing, I think self-explanatory, but still we'll write a note. First you set the standard, that is you decide your plan, see what is happening in the actual, compare them, calculate variances, find out the reason. Once you investigate, you'll find out what is disposition of variances. Once you investigate, you'll find whether it's a controllable variance or a uncontrollable variance. For example, last week what happened is an uncontrollable variance for us. Last week what happened was an uncontrollable variance. Now I cannot penalize anyone for that. But if I'm losing a lot of hours in this week, then it is a controllable. The whoever has been the reason for loss of time would be questioned on that. That why are we not taking proper classes during this week? Last week was impossible because of XYZ reason. So disposition is finding out the reason and making someone responsible. Or if it's abnormal, then change the standard. Go ahead and change the standard. Process of standard costing. Process of standard costing. Setting of standard plus setting of standard, measurement of actual performance, measurement of actual performance, comparison of performance, comparison of performance, comparison of performance, investigation of variances, and disposition of variances. You will have to give someone responsibility for that. Investigation and disposition of variances. You'll have to dispose them either as controllable or uncontrollable. Any doubts on this? Next is, what are the types of variances? We have different category. Favorable and adverse, you know. Favorable is something which reduces the cost or increases the profit. Adverse is something which is going to increase the cost or reduce the profit. So favorable variances are those which are profitable for the company. Adverse variances are those which cause loss to the company. Nothing to be explained there. Controllable and uncontrollable. What is controllable and uncontrollable? I'll give you an example. My raw material is sugar. So my plan was that I want to buy sugar at the rate of 40 rupees per kg. That was my plan. So plan is SP is 40 per kg. AP is 60 per kg. So 20 rupees variance has happened. I'm questioning the purchase manager. But then I get to know that there was a sugar scarcity in the economy. Some sugar production got down because of some reason, and the prices in the market went up to 80 rupees per kg. But still, this guy managed because of his contacts or something to get it at 60. So in this case, you should not penalize the person. You should in fact reward the person, because what was the original plan was 40. The new plan should be 80, and 80 versus 60 comparison is controllable. 40 versus 80 comparison is uncontrollable. 40 versus the 80 comparison is, this you learn at final level, called as planning variance and operating variance. So purpose of standard costing is to investigate the reasons for significant variation, which can be controlled by departmental heads, whereas uncontrollable are those which are beyond their control. Responsibility will only be fixed for controllable variance. If there is a significant uncontrollable variance, then go ahead and change the standard. Don't tell me standard price is 40. Tell me standard price is 80 now. Tell me the standard price to be 80. It is no more 40. This revision in standard is called planning variance, which you learn at final level. You will be learning that at final level. Let's write types of variances. Types of variances. Controllable versus uncontrollable. Controllable versus uncontrollable. Controllable variance. Controllable variance controllable variance is due to controllable variance is due to factors which are under control of departmental head. Which are under control of departmental head, plus departmental head will be made responsible for this. Departmental head will be made responsible for this. Uncontrollable variance is due to factors which are beyond the control. You can quickly write this: no responsibility fixed for this. In fact, just add one line: standards may change. Standards may change if there is a significant uncontrollable variance. Clear. Next, favorable versus adverse. Favorable versus adverse. Favorable favorable variance is due to a favorable variance is profitable for the company. It's profitable for the company, and adverse variances loss making for the company. Anything can come as an MCQ. That's the reason we are discussing all this. Something from this can come as an MCQ, different types of standards. So more focus should be on understanding the thing rather than by hearting it. Anything can come in multiple choice question. Any doubts on this? Can you proceed? Done? Almost done, I think. Others will be fairly simple. This chart is something we have already written. Differentiate standard cost and budgeted cost. We already wrote this here. I think initially when we were writing, budgeted cost refers to the cost to be incurred, standard cost, and we gave an example. So that example is also there. Who is to be held responsible for various variances? This is very critical because it can come as an MCQ. Price variance, purchase department; usage variance, production department; labor rate variance, HR manager; labor efficiency, again it can go to production or foreman. Who is a foreman? Is he's responsible for production. Foreman is a person who is responsible for the production. Let's write responsibility part. This can come as MCQ. Material price variance, responsibility, material price variance, purchase department slash purchase manager. So it says department, but there will be a purchase manager. Material usage variance, material usage variance, production department slash production manager. Prices purchase department or purchase manager. Production is or usage is production department or production manager. Labor rate variance, personal department. You can call it as personal, you can call it as HR, you can call it as manpower slash manager. Either the department or the manager. Personal department, HR department, manpower department, different names can be given. Either the department is responsible or its manager, mostly the manager. And labor efficiency, production department manager or foreman. Foreman is a person who is responsible to take care of the efficiency of labor. Clear? Can you proceed? Next, what are the advantages and criticism of standard costing? Standard costing, we have learned a lot of things. So there are many advantages. One, it gives you a warning sign as to what is going wrong. It gives you a guidance as to how you can proceed ahead. It also is helpful in measuring the performance and cost control. So serves as a basis for measuring operating performance and cost control. Predict cost, hence fix the price. Evaluation of jobs, inventory valuation. We did one problem that 960 units into 33.60, that was with this standard costing understanding. Measurement of profits, basically it will give you a guidance and it will help you in taking corrective action. These are the two important points. Aids in business planning, budgeting, managerial decision making, standardization, provides objectives and targets that becomes a guidance for the employee. Uniform basis for comparison, wastage and all can be controlled. Now criticism is, many a times there are two three things. One is, lot of times the standards may become redundant. You fix something but in reality that standard is not going to work because a lot of changes have happened. Example, when COVID came in, those standards were of no use because of the changes. Second, if output changes significantly, see, when I do my cost calculation, I've assumed that the cost will be 20 rupees per unit. But if you are doubling your production, 20 per unit can even become 18 per unit because of economies of scale benefits. So, when there is a variation in prices, one of the chief problem faced in the operation of standard costing is the precise estimation of likely prices. Varying levels of output, if there is a varying levels of output, if the standard level of output is not achieved, then it will not be possible to achieve the standard cost for fixed overheads. Hence the variation will be significant. Changing technology, mix of product, sometimes fixing the standard itself can be difficult. But according to me, one more issue is, many a times you fix the standard, that is, I told you, fix the plan. Fixing the plan alone will not give you any result. After fixing the plan, you will have to measure your actual performance and take corrective action. Many a times that is also not done by organization. You just fix the standard and leave it. Fixing the plan alone will not help you in your preparation. After fixing the plan, you will have to take all the corrective action based on your actual performance. Okay, I think that's all. After this, these are the charts which you wrote. The chart is not there, only the formula is there in this part. This is just to, in case you want to refer the formula. Let's just write the note on this one. Advantages and criticism. And criticism. Advantages and criticism of standard costing. Advantages and criticism. Advantages. Advantages. Performance evaluation. Performance evaluation. Profit computation. Just give me a minute. Hello. Performance evaluation, profit computation, selling price fixation, selling price fixation, inventory valuation, inventory valuation, guidance slash targets slash objectives for the company. It gives you the guidance, or the target, or the objective. This should do cost control, waste minimization. cost control, waste minimization. These are the advantages. Criticisms, criticisms, variation in prices, variation in prices, variation in output, prices, output, changes in technology. This is not a big problem. Change in technology doesn't happen all immediately. It is something which would be planned by the organization. Changes in product mix, changes in product mix, difficulty in fixing standards. Sometimes there can be a genuine difficulty in fixing the standards itself. Clear? I'm kind of done with standard costing. I don't have time to start budgetary control. Tomorrow's session we'll start budgetary control. Ideally, budgetary control should get over in the tomorrow. We have two sessions, so we'll see. Mostly budgetary control will get over. The theory part would be pending. So we'll see that in the next session. Okay. Thank you, friends. Chapter 14, marginal costing. First one, what is marginal cost, marginal costing, differential cost, incremental cost? Different names have been given. Marginal means incremental or additional cost for every one unit. Additional cost for every one unit. In short, variable cost is equal to marginal cost. Variable cost is equal to marginal cost. Marginal costing is a technique which does not consider fixed cost for inventory valuation, and it's a technique where you classify the cost into variable and fixed for the purpose of decision making. Multiple decisions can be taken. What is differential cost is when you compare two different production levels, that is 10,000 units vis-a-vis 20,000 units. When you compare, that difference in cost is called differential. It could be any comparison. 10,000 vis-a-vis 15, 15 vis-a-vis 25, 20 vis-a-vis 10. Differential cost is the difference between the cost of two different production level. It is a relative representation of cost for two different levels and can either be increase or decrease. Volume goes down, decrease in cost. Volume goes up, increase in cost. In differential cost, you can have a variable as well as fixed. How fixed can come? If it changes. If it changes, we have seen problem where beyond 80% capacity fixed cost can change. Incremental cost is the cost due to change in volume or process or production activity. Technically, incremental cost is nothing but marginal cost. I don't know why they have differentiated this. Differential is comparing two levels of activity. Incremental cost is the extra cost for every one unit of production. Go to the theory part. Introduction. Marginal cost, incremental cost of producing one unit. Incremental cost of producing one unit. Example, variable cost. Incremental cost of producing one unit. Example, variable cost. Marginal costing. Method of costing. Method of costing which does not consider, which does not consider fixed costs for inventory valuation, which does not consider fixed costs for inventory valuation, does not consider fixed cost for inventory valuation. Difference in cost increase or decrease between two levels of production activity. 40% production and 50% production. Two levels of production activity. Two levels of production activity. Clear? Can you proceed? What are the characteristics of marginal costing? I think broadly what I've discussed will only be there. All elements of cost are classified into fixed and variable. I'm not going to give any note on this. Well, let's read every point if at all it's needed. Semi-variable cost has to be analyzed into fixed and variable. In any problem, semi-variable split into fixed and variable. Marginal or variable cost is treated as the cost of the product. Only variable cost is considered in inventory valuation. Finished goods is valued on the basis of variable production cost. Fixed cost is treated as period cost. I'm not sure how many of you will remember, but in the first class we would have done product cost versus the period cost. Product cost is those which is considered for inventory valuation. Period cost is those which goes to the debit side of P&L and not recorded for inventory valuation. So we had done this in the initial class, product cost and period cost. Period cost which are not considered for inventory valuation and are charged as an expenditure in the period of incurrence. So in marginal costing, fixed cost is not considered for inventory valuation. Fixed cost is not considered for inventory valuation and it is treated as a period cost. So this can come as an MCQ where they say, how is it treated? Period cost or a product cost. Prices are determined based on marginal costing. Profitability is determined on the basis of contribution. No extra notes on this, okay? This is what we have seen in many questions. Point number 3, already done. This is the statement format we follow. Sales less variable cost, contribution less fixed cost and profit. Key differences between marginal and absorption. You can write many things, but for me only one main difference. Main difference is variable cost is considered for product costing and inventory valuation, fixed as well as variable cost. Fixed as well as variable cost. Fixed cost is considered as period cost. Fixed production cost is considered for inventory valuation. Fixed production cost is considered for inventory valuation. I will not be giving a note on this unless I see some important point. Cost data highlight total contribution. Net profit is determined. Difference in the magnitude of opening stock and closing stock does not affect the unit cost of production, is impacted due to the difference due to impact of related fixed cost. Fixed cost impact will be there. Cost per unit remains same irrespective of the production. Cost per unit reduces as the production increases. Anyway, we have used the concept of OAR. If you don't use the concept of OAR, cost per unit will keep changing. Cost per unit will keep changing. I showed you if I write 5 lakh, it can increase, it can decrease. That is what they are trying to say here. Statement of profitability format, we have already written variable manufacturing cost, fixed manufacturing cost, cost of production, opening FG, closing FG, COGS, non-manufacturing, fixed non-manufacturing, cost of sales, under or over absorbed, revised cost of sales, profit. Sales less variable cost, contribution less fixed cost, profit. This is what I wrote in the last session. Variable manufacturing cost, opening FG, closing FG, variable COGS, variable non-manufacturing, total cost. Advantages and limitation. Now, advantages is very simple. Every organization, when you go to a shop, ask them how he wants to fix the price. He will determine his variable cost and add a profit margin. If you ask him how much is the fixed cost, salary, rent and all, is very difficult to determine for per product. For example, Bharadwaj Institute can find it very difficult to calculate how much is the fixed cost per student. So we determine the variable cost, add our own markup, whatever percentage. That percentage will help me in recovering fixed cost as well as profit. Fixed cost as well as profit. So this is a very simplified pricing policy. Proper recovery of overheads, shows realistic profit, how much to produce through limiting factor analysis, more control, decision making, short-term profit planning. One issue with your marginal costing is it kind of ignores fixed cost. It ignores fixed cost, but fixed cost is when you do your pricing, you're ignoring fixed cost, but fixed cost is incurred by an organization. Totally ignoring it is wrong. And other challenge is this: difficulty in classifying fixed and variable. Rent, for example, electricity, we have a variable as well as a fixed component. Today I'm taking a class, this electricity is a variable cost. I don't take a class, but still some electricity cost will be there. So classifying them can be very difficult. Them can be very difficult. This is the most important challenge in the practical world, that how do you classify them? How do you classify? Now, right. Advantages of marginal costing: simplified pricing policy, simplified pricing policy, simplified pricing policy helps in determining optimum mix, determining optimum mix. I'm writing the important points. Decision making, decision making, I think this is sufficient as far as the advantages is concerned. Disadvantages: ignoring fixed cost for inventory valuation, which is wrong. Even fixed cost can be incurred for inventory valuation. Accounting standard allows it. Ignoring fixed cost for inventory valuation. Differentiating cost as fixed and variable. That is, splitting the cost as fixed and variable can be a challenge. I'm writing the important points alone. Clear? Any doubts on this? Any doubts on this? Next point is, what is cost volume profit analysis? The other name for marginal costing is CVP analysis. What is CVP? Is impact of change in volume on the cost and profit of the organization. Impact of change in volume. You would have done problem where we've done 10,000 units. Then they'll say if volume increases by 20%, calculate the profit. So impact of change in volume on the cost and profit of the organization is called CVP analysis. When you change the volume, volume changed by 10%, profit could have even changed by 50% because fixed cost remains same. It is a managerial tool showing the relationship between cost, volume and profit. Impact of changes in cost, sorry, impact of changes in volume on the cost and profit of the organization. All right, CVP analysis. CVP analysis. Marginal costing is also known as CVP analysis, also known as CVP analysis. In this, we find the impact of change in volume on cost and profit of organization. Change in volume on cost and profit of organization. When volume changes, what's the impact on cost and profit? Clear? Any doubts on this? Done? PVR I'm not talking about. We have already written notes on this. That's the true profitability, true indicator of the profitability. BEP we have done, MOS we have done. How BEP is computed for multiple products, all these notes are already written. Shutdown point is done. Break even chart, okay, we did not, I have explained one question, but break even chart is nothing but you are going to show it in the graph. It is a diagrammatic representation of the total cost and total sales line. Total cost and total sales line, where fixed cost is a straight line, variable cost is an increasing line, total cost is an increasing line, total sales is an increasing line. The point at which both intersect is called as the break even point. Break even chart records cost and revenues on the vertical axis, level of activity on the horizontal axis. Lines representing fixed cost, total cost and revenue shall be drawn. BP is the point where sales revenue intersects with the total cost line. At that point, it's BP. Above that is margin of safety. Above that is the margin of safety. The break-even chart cannot assess, let me give note on together, cannot assess in computing the contribution for any level of activity. You want to know what is the contribution, then that's the difference between total sales and the variable cost line. Total sales and the variable cost. Under this chart, you will also draw a variable. In fact, when I was saying, I said we'll also draw a variable cost line when I was explaining the theory, because that variable cost line and the revenue line difference is the contribution. Profit volume chart is basically an extension of your contribution break even chart. Vertical line represents profits and losses at the horizon, and the horizontal axis represents level of activity. The level of profit are recorded at every level of activity, and the point at which zero profit is made is known as break even. You can keep using different names, technically doesn't really matter. All the three put together, I'll give just small notes. Go to the theory part. Break even charts are charts, just write charts. Break-even chart, break-even chart records total cost, fixed cost, and total sales in y-axis, for different volumes in x-axis, for different volumes in x-axis. Total cost line is there, fixed cost line is there, total sales is line. Point at which total cost line, point at which total cost line intersects with total sales line, is called as break even point, Contribution chart records additionally variable cost line, difference between total sales and variable cost line. Is called contribution. Total sales and variable cost line is called, all this you know, it's just that in a chart form you'll have to do. Profit volume chart records profits or losses in y-axis for different sales volumes in x-axis. BP is the point at which we make zero profit. BP is the point at which we make zero, sorry, B, yeah, okay. Or it's the other way around. Zero profit is where your BEP is, but okay. BEP is the point at which we make zero profit. Clear? Any doubts on this? Done? Any doubts? Angle of incidence. I'll maybe first show you the angle of incidence. What is angle of incidence is after you have made profits, after profits you have made, the gap, if this gap is very wider, it means you are earning more profits. If the gap is wider, the profitability is on the higher side. The profitability is on the higher side. If the gap is very narrowed, then the profitability is on the lower side. You would have seen this in one of the homework question called increase in angle of incidence. If angle of incidence is wider, PVR is very high. PVR is very high. Angle of incidence is lesser, PVR is on the lower side. So if, for example, this shaded portion is done where price was reduced, and the gap is further going down, the angle of incidence is shrinking. If it shrinks, it means you are making lesser PVR, lesser profits. If it's widening, you are making more profits and more PVR. Clear? Any doubts on this? This is the rate at which you are earning the profits once break even is attained. Angle of incidence is the intersection of sales line and total line at the break even point. Angle shows the rate at which profit is earned. Once the BPs reach, the wider the angle, the more is the rate of earning profits. A larger angle of incidence with a high margin of safety is a very favorable position. So if you have a wider angle of incidence, it means the rate of earning profits is on the higher side. The rate of earning profits is on the higher side. Now write angle of incidence. Angle of incidence. This measures the rate at which profit is earned. Rate at which profit is earned. Rate at which profit is earned after attaining BP. After attaining BP. Wider angle, more PVR, more profits. If you have a wider angle, more PVR, more profits. So if there's an increase in angle of incidence, be happy, you're going to earn more profits. There's shrinkage in the angle of incidence, you're going to earn the lesser profits. Any doubts on this? Done? What are the decisions which can be done? I think some of them you could have done in problem solving. Decision relating to excess supply, processing of export order. We had one problem where there was a special order of some 200 hockey stick or 2000 hockey stick. I had told you to change the question. So that could be an export order. Whether I want to process that export order or not is one example which you can do with marginal costing. Determination of price for stimulating demand. We would have done problems where they'll say, I want to reduce price. What should the price I fix? Demand will go up by this much. Demand will go down by this much. So what the price I can fix? Local sale versus export sale. We have not seen many problem like this, but at final level you have whether to do local sale or the export sale. Determination of minimum price for price quotation. I had given one homework question where there was a full cost, there was a variable cost, and the question asked what is the minimum price you want to charge. Minimum price is equal to variable cost. So that minimum price can be determined with marginal costing. Shutdown or continued decision, we have done in shutdown point. Make or buy versus in-house processing versus outsourcing. This you learn at final level. Make or buy decision can be done. Product mix decision, limiting factor. In limiting factor, should you do A, B or C? Should you prioritize B, C and A? Sales mix decision is same as product mix decision. Sale or further processing. Sale or further processing we learnt in margin, we learnt in joint and byproduct costing. If you remember in joint and byproduct costing, it was sale value after further processing less sale value at split of incremental revenue. Incremental cost was further processing, which is a variable cost. Further processing cost is normally a variable cost, and joint cost is normally a fixed cost, which is ignored. So that decision on further processing which you are doing is an extension of marginal costing. It is an extension of marginal costing. All right, decisions with marginal costing, decisions relating to excess demand, sorry, excess supply. That is, you have capacity with you. You have capacity with you. When you have capacity, you want to fix minimum price. All that you can do. Processing of export order, processing of export order, fixation of minimum price, fixation of minimum price, local sale versus export sale, local sale versus export sale, can go on like this. I can keep writing. I've written the important ones. Decision relating to excess demand. When you have excess demand, that is where your limiting factor comes into picture. Deciding product mix, deciding product mix. I don't know. They have given separately sales mix. Both are same only. Product mix, sales mix, make versus buy decision, make versus buy decision, and write this also. Sale or further processing, sale or further processing. Clear? Any doubts on this? Last one is that limiting factor. I have given the format is slightly different here, doesn't really matter. Don't worry about the format I've given. I also don't remember which format I normally use. It can keep changing. This format also will give you the answer. The other format which I did also will give you the answer. So this we are not writing again. Let's now start with the theory oriented area. Budgets and budgetary control. What is budget and budgeting? We have already explained this. Budget is basically a quantitative statement which is prepared ahead of time, explaining what is going to happen in future. The future planning could be for income, that is debit side of P&L, credit side of P&L, asset side or liability side. Any of them could be planned by an organization. So it may include income, expenditure or employment of capital. What is budgeting is the process of preparing the budget. As I said, master budget is combining all the budgets together. So it is not so easy to prepare a budget. You have to coordinate with sales team, production team, manpower team, purchase team. So many teams will have to coordinate. Budgeting refers to the process of preparing the budget by coordinating with the various departments, is the provision of resources to support plans which are being implemented. Whatever plan we are going to implement, for that I need resources. What is resources? Men, material, machine and money. That four things planning is what budgeting is all about. Now right, budget and budgeting, budget and budgeting. Budget is a quantitative statement. It's a quantitative statement prepared, is a quantitative statement prepared ahead of time, ahead of time, to forecast, to forecast income slash expense, forecast income slash expense slash employment of capital, income slash expense slash employment of capital. budgeting budgeting is the process of is the process of preparing the budget by coordinating with various departments by coordinating with various departments. Clip. Next, what are the essential steps for preparing the budget? See, whenever an organization wants to prepare a budget, very clear requirement is you define roles and responsibilities clearly. If you do not have proper roles and responsibilities clearly defined in the organization, preparing a budget is of no use. Purchase manager is responsible for the purchase budget. So I have given him some responsibility along with certain rights. He has certain rights and he'll be given certain responsibility. So once that is done, that's the most important part. That is, you have appropriate, clearly defined organization structure should be clearly defined, and responsibilities are assigned to identifiable units within an organization. Apart from that, you can have a lot of other aspect, which is you should be able to revise for events that were not kept while preparing the budget. Example, the recent flood which happened, because of which my budgets have to undergo change. I cannot go with my old budget. Budget should be quantifiable wherever possible. Wherever it is possible. See, because a lot of times if you give subjective element, it will not work. I will say, I want my employees to work well. Now, what is working well? Please define them. Please define that in proper numbers. So, budget should be quantifiable. There are places where the company will say, my target is to prepare quality products. Now, what is quality? Please tell me, how do I measure it? Just saying quality product is not going to be helpful. I can measure quality product by number of rejections which are coming in my manufacturing process, or number of replacement which I'll have to do to my customer, or number of customer complaints which are anything which can be quantified. Anything which can be quantified is very, very critical, and you should have ability to revise. How will you revision? By doing this periodical monitoring. If you do periodical monitoring of budget, and base, lot of organizations in the practical world have a system called as variable performance pay for most of the employees. What is a variable pay is? That's a bonus which is paid based on the performance of an employee. This performance which is given to him will come from the budget. From the budget, I'll give certain targets to. There is a middle layer, there is a lower layer, there's a top layer. The top layer will be given maximum variable pay. They'll have maximum variable performance pay. Why variable pay? Is because they will have to ensure that all the targets are getting met, and whatever targets we are doing, there's something called as budget difficulty. What is budget difficulties? ICI has said you'll have to secure 40 marks in every subject and an aggregate 50 marks. Students are writing, trying to clear. So it's a tough course, but students are giving. Assume ICI says our passing mark per subject is 80 and aggregate is 90. No student would want to get into the course, because you have now made it extremely difficult, where there is no incentive for student to try. So whenever you prepare a budget, one essential element of a budget is the difficulty should be one which is challenging. Challenging is it is difficult for to achieve, but it should not look like impossible. If it looks like impossible, people will give up. They'll say no point in putting in efforts. If you're going to give, you'll say that you have to achieve this, then I'll pay variable pay. I'll say, okay, I don't need variable pay. Let me not get into this scenario itself, because the difficulty should be one which is reasonable. Yeah, it is here. with reasonable target. You should have reasonable target. If you try to put some unreasonable target, see, difficulty is good. ICS says 40 becoming 50. Still students may try it. But if you say 50 has to become 80 per subject and all, no students will try, because we have seen in the past, no student has scored 80 in all the subjects till now. So it is kind of impossible to achieve. When you put in such targets, people will say, let's not put any efforts in this. Now, right, essential steps slash elements. Essential steps slash elements. Reasonable budgets. Reasonable budgets. A reasonable target. Let's use the word reasonable targets. Quantifiable. Quantifiable. Scope for revision. Scope for revision. You should be able to revise based on certain unfortunate events. Regular monitoring. Regular monitoring and performance linked payments. Regular monitoring and performance linked payments. Performance linked payments. Fixed responsibility or defined responsibility. Defined responsibility. Clear organization structure. There are other points, but I've just written the important ones. Okay, you can leave space in case you want to write extra points. Defined responsibility, clear organization structure. In case you wish to write extra, please write it later. Clear? Can you proceed? Done. What are the characteristics of a budget? Now, budget characteristics may, again, it is kind of interlinked. I'll keep talking about some of the points which I wrote earlier may even come here. So first is budget should be for a definite time period. What is definite time period is, we have three types of budget: short term budget, medium term budget, long term budget. Short term is normally less than a year. Medium term is around 3 years, 1 to 3 years. It can be defined differently also. Long term is more than 3 years. So there should be a specific time period. Budget is a written document. Written document is, I will have to, practical world, every organization prepares a budget, gets a sign in or gets an approval from each of the responsibility head. We learnt about responsibility center, cost center, profit center, investment center. So all these heads will give their approval saying that this budget we agree to. Is a detailed plan of all economic activity. What is economic activities? Income, expenditure, asset, liability. Is a mean to achieve business and is not an end in itself. What is not an end in itself is, just because you have prepared budget does not mean everything will happen. Budget is a guidance. So you have prepared a budget, that's not the end of work. Now you'll have to start achieving it. It is just a mean to achieve the business. It cannot give you anything. Budget cannot assure that Bharadwaj Institute will complete classes on time. Budget is just a tool to guide us in that direction. You will have to work with the budget. Helps in planning, coordination and control. Needs to be updated, corrected and controlled every time when circumstances change. As I said, I'll keep taking points from the earlier one. Acts as a business barometer. What is business barometer? Is what is happening in the company. Is usually prepared in light of past experience. What is past experiences? When I prepared my budget or the timing which we are going to take, one thing which we kept in mind is, what did we do in the past batch? How much time did it take for us in the past batch? Based on that we do. Organizations are moving to a type of budget called zero based budgeting process. This is also there in the material. What is zero based budgeting processes? If I ask the production head, why are we going to have a cost of 20 rupees per unit? He should not give me a logic saying that last month we spent 19 or 25 or 20 and this month we are going to spend this. That cannot be the logic. Zero base means you will have to drill down into it and say, for example, if I have to do zero based budgeting, I'll have to sit first chapter 1. How many questions are there? What needs to be covered? Every question, how much time am I going to take? Put a total, and that should be the logic of my budget process rather than what I did in the past batch. So zero based budgeting process means you will have to do planning fresh without having, it's called clean slate approach. Clean slate means not taking anything of the past into picture. That is something which is organizations are trying to do, but it's a difficult exercise. Zero based budgeting is a difficult exercise. So many times budget is based on what happened in the past. Now, right, characteristics of budget. Characteristics of budget: definite time period, definite time period, written document, written document, scope for revision. I will revise it based on the situation. Scope for revision used for planning, coordination, and control. Planning, coordination, and control. Used for planning, coordination, and control. Based on past experience. It is normally prepared based on what has happened in the past. I'll take that data point and then try to prepare a budget based on past experience. Clear? Any doubts on this? Can you proceed? What are the objectives of budgeting? See, the important objective is very simple: planning, coordinating, and controlling. Planning, coordinating, and controlling the activities of an organization. That is what budget does. It's already written. Budget helps in planning, coordination, and control. Planning is very well known to you. What is planning is what you want to achieve, forecasting of future performance. Directing and coordinating is based on plans. I will know what are the resources I need. Resources means men, material, machine, and money. And according, we did some problems in manpower budget. In one problem we calculated number of employees needed. In one problem we said there will be overtime, there will be normal time, extra payment. So all that direction and coordination can happen based on the budgets. And controlling is doing comparison of or doing standard costing. Controlling is nothing but doing standard costing. Budgeting is dependent on effective planning within an organization. Plans are made in line with the overall objective. Individual plans, there's something called as strategic level. Reliance Industries strategic level planning will be taken care by Mukesh Ambani and some few people who are at the top. That is called top level management. From strategic level management, there will be a middle layer of planning and the last layer of planning. So strategic planning is at the top. Then there's something called as tactical planning and there's something called as operational planning. So every organization will first define the overall objective. For example, Reliance Industries can say our overall objective is to become market leader in telecom industry. I'm just taking one business of there. So that is the overall objective. Based on that, you decide your objective and then keep passing it on to the next layer. Individual plans at unit level must be in line with organization plan. Budget reflects plans and planning should have been taken place before budgets are prepared. Directing and coordinating can be used to direct and coordinate operations in order to achieve the stated target. If I have to achieve the target, I need men, material, machine, money. Always keep in mind men, material, machine, and money. Controlling is actual performance is compared with planned target, enables the company in effective control. As I said, it is nothing but standard costing. So objective is to achieve the overall objective of the organization. Bharadwaj Institute can have its own objective. Every company can have its own objective. Next, objective of budgeting. Objective of budgeting: helping an organization helping an organization in achieving helping an organization in achieving the overall objectives of the company. Budgeting equal to planning plus, what is budgeting is planning, directing and coordinating and controlling and controlling. Just give me a minute. Flip. Next, budgetary control. What is budgetary control is, after that budget has been prepared, your budgeting or budget has been prepared, system of management, control and accounting in which all operations are forecasted and planned in advance and actual results are compared with it. So budgetary control is a subset of standard costing. It is a subset of standard costing. In this chapter, the heading says budgets and budgetary control. We did nothing of budgetary control. We just did budgets. Budgetary control was standard costing. That's why these are two interlinked. So budgetary control, if you want to do, establish a budget. At your end, I told, do the planning, do a comparison. Once you do comparison, you will get to know reasons. The reasons may force you to change the budget also. The reasons may force you to change the budget also. In practical world, organizations do change the budget in case the reasons are forcing us to make that change and placing the responsibility for failure. In case there's a failure which has happened, you will have to fix some responsibility. Next, budgetary control. According to me, there's no big difference between budgeting and budgetary control. Budgeting is also the same thing. Budgeting is just the process of preparing the budget. Next step onwards, what you do is the budgetary control. Budgetary control equal to preparation of budget, preparation of budget, comparison of actual with budget, comparison of actual with budget, actual with budget, in bracket variance analysis, variance analysis, fix responsibility for deviation in performance, fix responsibility for deviation in performance, deviation in performance, revise budgets if needed based on actual circumstances. Go ahead and revise the budgets if needed. In case there is a need, please go ahead and revise the budget. Clear? Proceed. Objectives of budgetary control. I know you can keep bringing in the same elements here. Objective of, see, budgetary control focuses slightly different. What is budgetary control? Is the focus is comparing and fixing responsibility. Budgeting means the focus is on coordinating. Budgetary control is a subset of budgeting. It is a subset of budgeting. So what are the objectives of budgetary control? Determining targets of performance for each section or department of the business, laying down the responsibility, basis of comparison of actual performance with the predetermined target, ensuring best use of available resources, coordinating the various activity, providing basis for revision of current and future policies, drawing up long run plans, providing yardstick against which actual results can be compared. I know they can keep giving any number of points, but basically this is what they've told. This is what they've indirectly told, that I want a yardstick to compare my actual performance with certain budgets and take some corrective action. If you see here, first is determining targets of performance for each section or department of business. That was our point one already written. Point two is a subset of that. This is doing that comparison, or doing the comparison. Doing, so both are doing comparison only. Providing a basis for comparison of actual performance, providing a yardstick against which actual results can be compared. Then after that, what they are saying is provide a basis for revision of current and future policy. So based on your performance, you may make certain changes if needed. Right? Objectives of budgetary control. I want to technically write similar only. Preparation of budget. Preparation of budget. Preparation of budget. Fixing responsibility. Fixing responsibility. Providing a yardstick, compare actual performance. Provide a yardstick to compare actual performance. To compare actual performance. Make or provide a basis. Provide a basis for future plans and revision of plans. Provide a basis for future plans and revision of plans. Clear? Can you proceed? Any doubts on this? Done? Determine the steps to be followed for establishing budgetary control. You can read it, you will not find anything new. So just read it. I don't have anything to explain there. The same thing they keep talking in a different way. You can read the points, you'll understand that there's nothing new there. You will see similar points being repeated there. prepare a budget, compare actual performance, take corrective action. That is what is net mentioned there. They can keep giving in different name. I don't know why so many questions are. This chapter has a lot of theory oriented question, but it's exactly the same. I am not telling anything new here. All right, steps to be followed for establishing effective budgetary control. Steps to be followed for establishing effective budgetary control. Determining the objectives to be achieved. Determination of activities. Determination of activities. Laying out of plans. Comparison of actual performance. Comparison of actual performance. And finally, taking corrective action. The corrective action could be even changing the plan. Or plans are wrong, so take corrective action on that also. Or your reality is wrong, whatever it is. Taking corrective action. Yep, proceed. Done. Okay. Now one new element has come. Feedback control and feed forward control. This was something which was there at final level. IC has now moved it to CA Inter. This was not there in the earlier syllabus. Just a theoretical concept only. Let me first explain what is feedback control and feed forward control. What is feed forward control is, I am going to make first a forecast. Listen, there's nothing there. Please listen. I'm going to make a forecast of future performance. See, Bharadwaj Institute says we have to complete batch by March month. If that's my plan. Now I'm going to do forecasting of my performance and see whether that can happen or not. Whether that can happen or not. If it is not likely to happen, now itself I take corrective action. Now itself I take corrective action. Feed forward means taking an action before the event has happened. Taking an action before the event has happened. What is feedback control is, March month got over, syllabus did not get completed, and then I am taking corrective action. Feedback means at least in future I don't make errors. So feedback means, our Jan month got over, in Jan we found certain issues are there, so I take corrective action based on Jan. Feed forward is taking action before the event has happened. Feedback is taking action based on reality. Standard costing is an example of feedback control. Standard costing is an example of feedback control. Everything has happened. See, when you give me a target, when some target is given to me, at that time itself I can visualize what are the problems I'm going to face. For example, my target is, I need 2 lakh rupees in another 6 months end. That's a target. Why do I need 2 lakh rupees? Because some expense is going to come in the month of June, so I need 2 lakh rupees. Now I start visualizing what is going to happen in Jan, what is going to happen in Feb, March, April, May, June. Can I reach that number or not? No, you cannot reach that number. Okay, let me take some corrective action now itself. In January there was one expense planned. I'm avoiding that expense. I'm saying let me not spend this. Maybe I was planning for some travel. I'm saying let's not do this travel now, because we will need 2 lakh after 6 months. So feed forward is forecasting of the performance. Feed forward is called preventive control. Feedback is called corrective control. Feed forward is difficult for an organization to implement. Reason is very simple. Forecasting of future has its own set of challenges. When you try to forecast future, it has its own set of challenge. Feedback control, actual figures are collected and compared with the budgeted figures. The exercise of variance identification after the completion of budget period, variances are reported, and based on the report, corrective actions are taken, responsibility is fixed, and modification of future targets are implemented. This is less expensive to maintain but has limitation. What is limitation is you cannot change the past now. You have already done an error, so you cannot change that now. This is opposite of feedback control of budgetary control. This is called preventive control mechanism. Budget are set at the inception and the actual results are continuously monitored and compared. The targets are kept realistic and the targets are reviewed. The system is very expensive and beneficial where the business environment is dynamic and information has an important role in getting edge. That is when a lot of changes are going to happen. Feed forward is a better system. Feed forward is a corrective control where we have to forecast your future and see whether you are able to achieve your target or not. Now, right, feedback control and feed forward control. Feedback control, system of system of feedback control, system of corrective control, system of corrective control, comparison of actual performance, comparison of actual performance with budgets, with budgets, and based on that, corrective action is taken. Based on that, corrective action is taken. Clear? You can write maybe one point. Less expensive and has limitations. Feed forward, exact opposite. Feed forward, system of preventive control, system of preventive control, preventive control involves forecasting of future performance, forecasting of future performance, involves forecasting of future performance and comparison of same, comparison of same with budgets, comparison of same with budgets, to take, 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 corrective action, to take corrective action before the event, to take corrective action before the event, corrective action before the event. Expensive, expensive, but useful in dynamic environment. Expensive, but useful in dynamic environment. Clear? Next, explain the role of a budget committee or budget officer. See, every department has a head. Like sales department, we have a sales head. Purchase department will have a purchase head. Finance department will have a head called CFO. He will mostly be the budget officer. What is the role of a budget officer? Is to ensure that budgetary control is working smoothly in the company. The budgetary control process is working smoothly in the company. The responsibility for successful implementation of budgetary control rests with the budget committee acting through the budget officer. The budget officer will mostly be the CFO of the company. Budget committee will include managing director of the company, CEO of the company, CFO of the company. All top heads can form part of that committee. The main responsibility, I think again it's going to be the same thing. I don't know, I keep repeating the same thing. Prepare budget, forward the budget to the responsible individual, preparing periodical reports to compare actual against budget, follow up for action on the budget reports, prepare an overall budget working report, provide periodical reports for the board meeting. If you see, very simple: preparation, comparison, taking corrective action, revision of budget. These are the four important things he has to do. All right. Budget committee slash budget officer, responsible for successful implementation, successful implementation of budgetary control system, successful implementation of budgetary control system, takes care of preparation of budgets, takes care of preparation of budgets. I'll just write those three important things: comparison of actuals, comparison of actuals, taking corrective action, clear? Next, what are the advantages of budgetary control system? So the main objective is, or the main target is to achieve our goals. So when you want to achieve goals, you'll have to take the debit side of P&L, credit side of P&L, and also monitor your assets and liability. That is, you'll have to control your expenses, increase your income, ensure that resources are available to achieve our target. Efficiency helps the company to reduce unplanned expenditure and hence improves efficiency. Anytime if you want to travel, one person out of your family, maybe your mother or father, would prepare a budget or what they're likely to do. Because if you don't have this budget in place, what will happen is you'll unnecessarily do some expenditure which are not needed. So it can help in cutting down unplanned expenditure, control on expenditure, linked point, finding deviation, which is comparison, effective utilization of resources, men, material, machine, and money, revision of plan, implementation of standard costing system, cost consciousness, and credit rating. See, one important point is, if somebody knows that something is getting measured, then only control will come in that. If you don't know something, for example, at my home, I ask for 1,000 rupees, my parents give me 1,000. Again, I ask 1,000, they keep giving me. If they keep giving me without asking any question, I'll keep randomly spending money. Nobody is going to question me. But if there is somebody who is going to ask me something, then obviously things will come into picture. That is what budget does. It gives a guidance so that people get into that cost consciousness mode. You will get into cost consciousness mode. At this time, because of the flood, unfortunately, some of the people would have some losses which would have happened because of the flood. So what will happen now is they will cut down on some other expenses, because that's something which is pushed on to them. This is something which is pushed, but budgeting will make it as a regular exercise. Regularly you will know when to spend, when not to spend. Now, advantages of budgetary control: improves efficiency, improves efficiency, reduction in cost, effective utilization of resources, utilization of resources, implementation of standard costing, implementation of standard costing system. I'm not again writing comparison. That is what standard costing system is. Cost consciousness. This is very critical because many a times people will keep randomly spending otherwise. So you need that consciousness to come. Clear? Can you proceed? Now, limitations of budgetary control is, see, there was one point I read sometime back. Budget is a tool to achieve results. It cannot guarantee performance. Okay, it can never guarantee performance. So many a times people feel, why should I spend time in doing all this budgetary? Because in the end, whether results will come or not is not sure. So based on estimates, first is budget is prepared based on estimates and they may need revision. This issue is kind of sorted out in the practical world. This is not a big issue because we allow for changing the budget. Time factor and expensive is one major issue. Preparation and execution of budget involve investment of time and cost. When I say involves investment of time, I need cooperation from so many people. The sales head has to come, production head has to come, he has to coordinate with production has to coordinate with sales. If that coordination is not happening properly, we are kind of stuck there, because I cannot ensure or I cannot prepare the budget unless these guys are ready to coordinate and give me a proper result. So cooperation required and not a substitute for management. What is not a substitute for management is budget cannot give you results. Just because you have prepared a budget, it cannot say that, okay, I have prepared budget, results will come. You need still the management team to do work properly. So it's not a substitute for management. Lot of times in practical world, there are companies, for example, Bharadwaj Institute doesn't prepare a master budget and all. We are not really, because for our organization, we don't need a budget like this. But For our classes, we do have prepare budget, saying that how are we going to achieve the target which we have, that is completing the syllabus, all that targets we have. But it doesn't make any sense for us to prepare a master budget and then get into all that action. Now, right, limitations of budgetary control. Based on estimates, based on estimates, in bracket revision may be required. Expensive, 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 proper coordination, expensive, proper coordination, time and money. I know time and money and expensive both are same. I don't know why they have given separately. Time factor and money factor, kind of similar points. Not a substitute for management. Write this also. Rigid. What is rigid? I'll explain. Clear? What is rigid document is, I have given a budget. A budget tells me that spend only this much. But suddenly some unforeseen event has happened, and in that stage, saying that my budget is not allowing me, I should not spend, will not work. You may have to go ahead and do something which is beyond your budget. It should not become a restrictive factor. That is where management takes calls. When flood happened, a lot of people would have spent more than what they had planned for, because this is a situation which was unforeseen, an extremely difficult situation. So you go beyond your budget and then start spending more. Any doubts on this? Okay, balance theory question. I'll discuss it in the next session and then we end it. I think still we have a lot of theory question in this chapter. Another 14 questions are there. I'll discuss that in the next session and then we start with the last area, which is marginal costing. I'll end with this. If there are doubts, let me know. Good morning, friends. So let's now move to the balance questions which are pending in your budgetary control system. In the last class, we have done all the practical problems and we had also moved to the theoretical discussion. In the theoretical discussion, we have completed around 11 questions. So let's quickly close the balance question. So the next question is, what are the components of budgetary control system? Now this is something which we have already seen. If you see in budgetary control system, we have different types of budgets. One is called physical budget, where we are trying to find the quantity part of it. Example, they have given us your sales quantity budget, or your production quantity, or inventory quantity. Cost budget is for these budgets, if you are able to determine the value part of it. For example, manufacturing cost budget, selling cost budget, admin cost budget. Profit budget is something which is going to help us in ascertainment of profit, and the financial budget, which is basically preparing a budgeted balance sheet of a company which will disclose the financial position of the company. When we are preparing that, we may have to go through a capital expenditure budget, because this will help us in knowing what are the fixed assets an organization is going to have. So we have four types of budgets: physical budget, cost budget, profit budget, and financial budget. So let's just write them now. Let's move to the next part, which is components of budgetary control system. Components of budgetary control system. We have four types of budgets here: Physical budgets, physical budgets specifies physical quantities, specifies physical quantities such as sales quantity, production quantity. Physical budget specifies physical quantities such as sales quantity, production quantity. Cost budgets, cost budgets provides budgets for provides budgets for various costs such as, one example, manufacturing cost budget, such as manufacturing cost budget, various costs such as manufacturing cost budget. Profit budgets, profit budgets helps in ascertainment of profit, helps in ascertainment of profit. And financial budget, financial budgets helps in ascertainment of financial position, ascertainment of financial position. So we have four types of budgets: physical budget, cost budget, profit budget, and financial budget. This maybe the sales budget helps us. For your profit budget, an example is a sales budget. This you can say capital expenditure budget, capital expenditure budget, budgeted balance sheet. A budgeted balance sheet could be of use here. Quickly note it. Let me know if there are any doubts. Quickly note this. Okay, I proceed ahead. Explain the impact of budget on motivation of employee. See, one major purpose of an organization is when you prepare a budget, you would want the employees to feel ownership of the budget. What is ownership? Is they should take it as a personal target to achieve that. So that is possible when you involve these people in the budget process. That is, when I'm preparing a budget, I should involve the employees. Involvement in budgeting process, participative budgeting, which gives them a sense of ownership, and it will also help us in fixing certain achievable targets, because unrealistic target would demotivate the employees. So you want the employees to be motivated, and that is possible only when you prepare a budget which is realistic, which is achievable, which is realistic and which is achievable. Somewhere when you prepare a participative budgeting process, it will help us in motivating these people. Also, some issue which can happen is when you involve these people in budget process. See, what is budgeting or participative budgeting is the employees form part or they participate in the budget process. When these guys are participating in the budget process, you are giving them the targets. And if you involve these people, there's one challenge, that is, see, if I am an employee, I would want my target to be lenient. I don't want very challenging, extremely challenging target. So when I'm participating, it can sometimes distort the budget's objective, because I would try to fix it in such a manner that the target is easily achievable for me, because based on the target some rewards and all are going to be paid. So involvement is very critical, fixing achievable target. And you should do performance measurement. The target should be measured not only at department level, also at the individual level, and you should pay rewards based on that. And if a budget which is easily achievable, see, a budget targets which is easily achievable may underutilize the resources. On the other end, if you try to keep the target very challenging, it becomes difficult. That is where they're saying a balanced approach. Take it to the effort zone, but beyond the comfort zone. Comfort zone is easily achievable, effort zone is achievable with certain difficulty, and beyond this is unachievable. So don't try to fix targets which are not achievable. Next, impact of budget. Impact of budget on motivation of employees. Impact of budget on motivation of employees. On motivation of employees. Involvement in budgeting process hyphen participative budgeting. Involvement in budgeting process hyphen participative budgeting. Participative budgeting. Involve employees in budgeting process. Involve employees in budgeting process. In budgeting process, which motivates them, which motivates them and leads to achievable targets. Leads to achievable targets. Optimum utilization of resources. Optimum utilization of resources. Utilization of resources. Of resources. Fix targets. Fix targets. Fix targets. Fix targets up to effort zone. Effort zone. Effort zone. And the same should be beyond comfort zone. Comfort is easily achievable, effort means some difficulty is there. So you should try to go till the effort zone. Go till the effort zone, which is beyond the comfort zone. It is beyond the comfort zone. And performance measurement. Very critical that you do a performance measurement. Measure performance. Measure performance at individual as well as department level. that is my performance as well as my overall department level. You will have to measure, the performance, pay rewards, based on this, because I would want my employees to be fully motivated, because a fully motivated employees will make it easier for me to achieve that target. So it's very critical that I ensure my employees get fully motivated whenever I am preparing a budget. How a budget is prepared. Now for preparation of budget, one, two, three critical things is you need to have a budget officer or a controller. This guy has to coordinate with so many departments. But the most important factor according to me is key factor or budget factor. What is key factor or budget factor? Is something which is going to limit my activity. You will learn about this in detail in marginal costing, something called as limiting factor. You learn there. So an organization first has to define the objective, what you want to achieve, decide your key factor, which will mostly either be demand or production, have a controller, prepare a budget manual. What is a budget manual? Is a document which has adequate information which will help us in planning process, decide what is the budget period, short term, long term, and standard of activity. What is standard of activities? What is the standards we are fixing? So the company must rely on the combination of past information and the expectation of future operating condition. Based on this, you are going to prepare your budget. In this budget manual part, we have an extensive discussion in the next question, which is nothing but it is a collection of document that will give key information. It has to give certain key information which will help in effective budgetary planning. It is going to help in effective budgetary planning, contains much information which helps in effective budgetary planning. It will include information like what is the budgetary objective, what are the results we want, what is the organization chart, who is responsible for each of the functional budget, sales budget, production budget, manpower budget. So all this is very critical. Once the budgets are prepared, you will have to you will have to give this budgets to everyone, and also the formats of the various budgets can be included as part of the budget manual. Those formats or forms can be included. Let's write this now. How budget is prepared. I'll just quickly write the steps. How budget is prepared. Definition of objectives. Definition of objectives. That is, you define what is the objective you want to achieve. Identification of key or limiting factor. Identification of key or limiting factor, mostly sales, or mostly you can say demand or production. It will be mostly demand. Demand will curtail the production. Then I think we'll have to appoint a controller. Appointment of controller. Appointment of controller or a budget officer. Have the budget manual ready, which will contain, I'll write a note on budget manual in the next part. Budget manual. Decide budget period. That is, what is the period for which you need to prepare a budget. Decide the budget period. Decide budget period. And standards of activity or output. Standards of activity or output. This is how the budget is prepared. This is the budget preparation process. Next is budget manual, contains detailed information, contains detailed information for guiding people in effective budgetary process, for guiding people in effective budgetary process, effective budgetary process. It will contain information, it will contain information such as organization objectives, people responsible for different functional budgets, people responsible for different functional budgets, yeah, organization chart, etc. Quickly write this. Let me know if there are doubts. Any doubts on this, please let me know. Okay, what is the budget class? I think it is, I hope it is written. Okay, what is a budget classification on the basis of capacity or flexibility? Why they say on the basis of capacity or flexibilities? Your fixed versus flexible budget, where fixed budget is for a predetermined capacity, it remains unchanged irrespective of the level of activity actually attained. This kind of budgeting is useful when there is more certainty and stability. When there's more certainty and stability, very simple, less time consuming, but this is not accurate, misleading. Flexible budget is which recognizes the difference between these costs and changes based on the level of activity. Wherever there are a lot of changes which are happening, fluctuations are there, it is good to go with a flexible budget. Now the only disadvantage of flexible budget is you may have expensive and labor oriented. Very expensive means you will have to keep changing the budget based on the actual performance, but flexible budget is what organizations are practically following. So budgets based on capacity or flexibility, nothing much for me to explain because we have done problems on this. Fixed budgets, fixed budgets, budget which does not change, budget which does not change, which does not change based on our budget which remains same irrespective of actual activity attained, irrespective of actual activity attained, irrespective of actual activity attained. Budget remains budget remains budget remains fixed, useful when there is stability, and certainty, when there is stability and certainty, stability and certainty. Flexible budgets, budget budget which undergoes change based on based on actual activity, which undergoes change based on actual activity, change based on actual activity, based on actual activity. Budget 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 recognizes the difference recognizes the difference between fixed, variable and semi-variable, fixed, variable and semi-variable cost, fixed, variable and semi-variable cost, variable and semi-variable cost, useful when there is uncertainty and lot of changes, when there are a lot of changes happening, it is good to go through a flexible budget. A flexible budget is useful when there are a lot of changes which are going to happen. In that scenario, it is good to go through a flexible budget process. A flexible budget process is very useful when we are going to go through a lot of changes. I'm not getting into the merits, demerits, all that's a self-explanatory. I hope you have noted this. This, I think, again, I had discussed when we were doing the problem. Does not change with actual volume, can be recased, operates at one level of activity, various budgets are possible, only one level of activity, variance analysis no use, variance analysis is useful. In case there are significant changes, then all this will go for a toss. Cost ascertainment and price fixation will not give a correct picture. How budgets are classified on the basis of function. Function is basically multiple functions are there in an organization. So a functional budget is like a subset of the master budget. So in your theory, I'm not sure, did I give notes on master budget? Let's just check. Yeah, budgets prepared for various functions of the company is called functional budget. Consolidation of functional budget is called master budget. So this is what it is. I'm not giving notes again. They are subsidiary to the master budget. Multiple budgets have been talked about. What is a master budget? Post preparation of all functional budget will prepare the master budget, which will consist of budgeted P&L and budgeted balance sheet. So it is basically consolidation of all functional budgets of an organization. Consolidation of all functional budgets of an organization is the master budget. How are the budgets classified on the basis of period? I did talk about it. Long term budget, short term and current. In fact, there was a medium term also, but now the ICA material talks about long term, short term and current. Long term is they are saying 3 to 10 years. Long term planning of the business. Short term is 1 to 2 years, and current is even less than a month or around weeks. It's kind of a planning on a regular basis. This is the planning on a regular basis. Next, classification of budgets. Classification of budgets. Classification of budgets on basis of period. Budgets on basis of period. Long-term budget. Long-term budget. Long-term budget provides long-term planning, provides long-term planning of the business, long-term planning of the business, 3 to 10 years. Long-term planning of the business, 3 to 10 years. Short-term budget, short-term budget, 1 to 2 years. Current budget, weeks / month. Nothing much for me to explain there. The budget is for a week or a month on the basis of period. Period is basically the time period which we are going to cover. For the time period coverage part. Quickly note it. I will proceed ahead then. We're kind of almost done with the theoretical element. Let's quickly close this. Zero based budgeting. I think I was explaining about this in some place where I said in zero based budgeting, we will have to give a proper justification for every cost element, and it cannot be based on the past data. It cannot be based on the past data. So here you will have to give decision or logic for every item, which requires each column, each cost element to be specifically justified. Activities are being undertaken for the first time. Sometimes it could be that it is done in the past and you are doing it again, but still you will have to give logic. So following stages: identification and description of decision packages, evaluation of decision packages, ranking, and then allocation of resources. That is based on your planning process. You will have to finally allocate the resources. Systematic approach, best possible way of evaluation. Wasteful expenditure can be done. It is a very difficult to implement, tedious process. Tedious is a time consuming process. This is a very time consuming process. Let's write zero based budgeting. Zero based budgeting. Budgeting approach. Budgeting approach wherein every cost element needs to be justified, needs to be justified properly, needs to be justified properly, even if the activity is, even if the activity is being done for the first time, even if the activity is being done for the first time. Advantages: systematic approach, systematic approach, systematic approach, best utilization of resources, best utilization of resources, optimum or best utilization of resources, wasteful expenditure can be eliminated, wasteful expenditure can be eliminated, resource resource allocation, resource allocation post proper cost benefit analysis, post proper cost benefit analysis. Disadvantages: lengthy process, difficult to implement. Because it's a lengthy process, it becomes difficult to implement this. Lengthy process, difficult to implement, difficult to implement. Differentiate traditional budgeting and zero based budgeting. Traditional, very simple, go with your previous level of expenditure. Zero based, justification needs to be given for every item. So what you do is you give reference to the past and make adjustment. Here you have to focus on the new cost and decide. You may deliberately inflate the cost. Here it is not possible because it is difficult, because you'll have to give justification for every item. Traditional is a routine approach which is easy to do. Zero based budgeting is a difficult process altogether. So again, I'm not giving much. Okay, just a small note. Traditional budgeting versus zero based budgeting. Traditional budgeting versus zero based budgeting. Traditional budgeting versus zero based budgeting. Okay, traditional budgeting versus zero based budgeting. Traditional budgeting, traditional budgeting focuses on past information, focuses on past information, whereas zero based budgeting, whereas zero based budgeting needs clear explanation, or needs adequate justification for every forecast, for every forecast. This is the key difference between this and your what is a zero based budgeting. Performance budgeting. Now, what is performance budgeting is the one which presents the purpose and objective for which the funds are required, the cost of the programs proposed to achieve those objectives, and quantifies data measuring the accomplishment and work performed under each program. That is, you decide the purpose and the objective. Here is a technique of presenting the budgets in terms of objective, different objectives which are there for an organization. So here what happens is you decide what is an objective. You can have multiple objectives in an organization. Decide the objective and then try to achieve that objective. Try to achieve that objective. Meaningful functional program. Bring system of accounting in accordance with the classification, norms, yardstick, work unit for various programs. What happens in traditional budgeting is you focus more on the financial aspect. More on the financial aspect is preparing ultimately the master budget rather than the physical aspect or performance. Performance budgeting tries to get into a clear relationship between the input and output. Traditional budget focuses more on items of expenditure. Here the focus is more on the functions of organization, are the key objectives which are needs to be taken up so that the targets are achieved. Next, performance budgeting performance budgeting identification of key purpose slash objective key purpose slash objective key purpose slash objective programs to achieve the purpose slash objective programs to achieve the purpose slash objective performance measurement of the objective performance measurement of the objective establishes clear relationship between inputs and outputs clear relationship between inputs and outputs. Traditional budgeting focuses more on financial aspect and controlling slash reducing cost. Performance budgeting focuses on key objectives and the attainment of the same key objectives and the attainment of the same. I think budget ratios we have already mentioned. We have given all the formula for this. So with this, the theory element of this chapter gets over. I think chapter, I had earlier told you, chapter 1, chapter 2, 3, the initial chapters had a lot of theory, and this is one more chapter which has a lot of theory oriented question. If there are any doubts, let me know. Thank you.